of a percent. Same story with the Shanghai Composite. And then in Europe, where there is some active trading that's taking place today, or at this hour, you'll see the DAX is in positive territory. It's up by almost 0.2%. A little bit of negative red arrows for the rest of the averages. It looks like the FTSE is the biggest decliner. It's down by just over 0.4%. And then in Treasury yields here in the United States, you will see that the 10-year, at least at this hour, is yielding 1.84%. Big news this week is going to be Wednesday when we have that FOMC meeting.
Okay, let's talk about some breaking news that's coming out of Europe. Literally overnight, it's official. The EU has granted the UK a Brexit extension. The new deadline, January 31st. This will be flexible, though, so when I say it's a new deadline, it means that the UK can leave before January 31st if a Brexit deal is ratified.
And an update on those fires raging across Northern California. The Kincaid fire now burned more than 84 square miles, and as of last night, was only 5% contained. More than 200,000 people were forced from their homes, and PG&E says power is out for nearly 2.7 million people. And California Governor Gavin Newsom declared a state of emergency as several new fires broke out yesterday afternoon. Officials are worried that that fire could jump across the 101 freeway and rapidly move west into an area that hasn't seen fire since 1940s. The vegetation there is dense, old, and dry, and that's obviously one of the problems out there. We actually, while you had Ron Barron, one of his previous holdings, I guess he doesn't have any Generac anymore.
Oh, is he not? Yeah, I knew that Aaron was on.
Aaron Jagfeld, but it was in the reason I'm reminded of it is the market opportunity for when you're turning off everybody's power,
right.
And it's not being knocked out. It's
what did he
just,
say about that? Are they?
The stock's up. I don't know. It's up 80% in last year, and I think they're having trouble even filling. In order to think of the market opportunity out there.
Right. I mean, the winds in California and Sonoma, they don't get winds like this. So it's whipping things up into a huge frenzy.
Like 80 miles an hour, some of the winds.
Yeah. Did you see Gavin Newsom actually said if Berkshire Hathaway wants to put in an offer to take over
for PG&E,
like now's the time?
Now's the time. There was a period where everybody was looking for him to do that. Remember that?
Yeah, I'm sure they'd like to see somebody come in and step in. But that's an infrastructure that has been underinvested in for decades and decades. So they have a major problem on their hand, and Generac may seem the easiest answer for a lot of these people.
Right.
In the meantime, LVMH has confirmed that it is in preliminary takeover talks with Tiffany. Reports say that the luxury goods maker, whose brands include Louis Vuitton, Christian Dior, and Dom Perignon, has offered $120 a share in cash for the upscale jeweler. That would value the company at about $14.5 billion. Tiffany shares this morning up by 21% on this news. Gain of almost $21 to $119.50. LVMH is trading flat at this point.
So I spent the night, as you'd imagine, on the phone about this deal. I think what you're going to see, just to sort of tell the viewers what's going to happen here, over the next week, as you'd imagine, Tiffany is going to go through the quote motions. They will reject this bid. They look at this bid already. I mean, most of the insiders look at it as too low. If you go back and look at the stock price of this company, just last summer, you were looking at a stock of $136. So I think the big question is going to be, in this grand negotiation with the company, with LVMH that is, does LVMH come back at a higher price? But I think what's going to happen is you're going to see them say they'll explore it because that's what they have to do. And then after a week or two of theater, they will say talk to the hand. And then we will see whether LVMH really wants to buy this company and how much they would want to buy it for. Of course, they could go through a proxy contest, but that would be something that would go along the sort of much longer lines of having to go through the motions of that. And you're going to the fiscal year for next year, so you'd have to run a proxy contest against the board members, et cetera, et cetera. But if you look at the stock there, you can get a sense of what's happened here.
That stock cratered at the end of the year as you saw everything happening into December 21st was, I think, its low, right around the same time the rest of the market. But it came sharply off of some highs. And obviously, trade talks have been a concern for it. Right. It used to be that more travelers here in the United States meant a big deal. If those travelers would spend a lot of money at the Fifth Avenue store.
Chinese travelers.
Right. So we'll see.
So you tell me if LVMH comes back. If LVMH comes back at $140, I think there's a deal. If they come back at $125, I think it gets more complicated. Meantime, let's talk about this other deal that took place over the weekend, or happened on Friday. The Pentagon awarding a lucrative contract for its Joint Enterprise Defense Infrastructure Program, otherwise, known as JEDI, being awarded to Microsoft. Now, as you all know, Amazon had long been considered the favorite for that deal, which could be worth $10 billion over 10 years. More than 5,000 government agencies use Amazon Web Services, which is certified at the highest security clearance level. But the victory highlights the rise of Microsoft's Azure cloud as a major challenger to AWS. In a statement, Microsoft said, "We are proud that we are an integral partner in DOJ's overall mission cloud strategy." Amazon said, "We're surprised about this conclusion. AWS is the clear leader in the cloud computing, and a detailed assessment purely on the comparative offerings clearly lead to a different conclusion." The bidding process had been quite contentious. In July, President Trump said he was looking at the contract after companies had protested. The president has repeatedly criticized Amazon over taxes and other issues. In Jim Mattis's book, the president specifically says to him, "How can we get rid of Amazon?" And we know,
he said specifically to screw Amazon.
To screw Amazon.
Yeah,
but you're saying it less politely than I am, but that's exactly what they said.
But Mattis also said in that book that forget it, we're not doing that.
Right.
This is going to be by the book.
But Mattis is no longer here.
Yeah.
So
when it went to Microsoft.
There may very well be lawsuits about this. There may be depositions about this. There may be all sorts of litigation. So we're going to see what happens. It's obviously a big move for Microsoft.
The other competitors had complained when it looked like Amazon was going to be in the lead. The other competitors had complained about the process too. Microsoft went on to say in its statement that they've been working with the Department of Defense for 40 years, over 40 years. On all
and
kinds of
Microsoft
things.
had come out much more publicly than Amazon and, frankly, specifically Google, about wanting to work with the government, about thinking it had a patriotic duty to do so.
Right.
There were people at Amazon, obviously, not on AWS per se, but holding back on other things or protests, if you remember.
Well, certainly at Google, there was a huge
and certainly at Google.
He doesn't like the Washington Post.
No.
He doesn't like the Washington Post.
You see the trending after the Baghdadi was killed. You saw the Washington Post headline, "Austere religious leader that..." Did you see it? You didn't see any of this? You have no idea what it was trending on Twitter? How did in the obit, they really refer to him as an austere religious leader who presided, nothing else in it. So, trending on Twitter was Washington Post obits for everyone you can ever imagine who died. And it was like in the number 2, like for Jeffrey Dahmer, it was creator devourer of creative cuisine, something like that. And they had, I mean, there were thousands of fake obits from the Washington Post. Stalin, just like, you should go in and look at it.
I'm going to go check it out.
Yeah.
Go check it out. There's some really good ones, because you can make great ones out of some of the most notorious men in history, or men and women in history, and then you...
Austere religious scholar at helm of Islamic State, dies at 48. Okay. I hear you.
Wow.
All right. Anyway, over the weekend, Facebook said it removed an ad that falsely claimed that Republican Senator Lindsey Graham supported the Green New Deal. The ad was placed, it was a stunt. I wondered why it would matter or who would believe it. A stunt by a left-leaning political action committee to demonstrate that Facebook would fact-check ads from political groups but not politicians. This scenario was raised last week by Representative Ocasio-Cortez during the hearing with Facebook CEO Mark Zuckerberg.
Would I be able to run advertisements on Facebook targeting Republicans in primaries saying that they voted for the Green New Deal? I mean, if you're not fact-checking political advertisements, I'm just trying to understand the bounds here. What's fair game?
I don't know the answer to that off the top of my head. I think...
So you don't know?
This is the great complication, though, because you have to decide how much you want them to police these ads or not, right? I mean, he was separately asked whether you could actually tell the voters the wrong day to vote on. You could actually target a specific audience and say that actually the election, or you could say the location of the election is in the wrong place or something like that. And he said for that, he would correct you. He wouldn't allow that kind of ad to run, or he would actually run a correction on the ad because he thought that was too dangerous. The question is other kind, and this is where's the line?
I don't understand why, for
question.
ads, if you're accepting ads, why aren't you held to the same standards as any broadcaster would be? it seems pretty simple. You don't have to fact check everything that's ever posted on your bulletin board aspect of this, but if you're accepting advertising on it, it seems like you could and should be held to the level to police those ads.
What do you say, Joe? You want them policed or not?
I caveat empty. I mean, they can do what they can. There's a lot of
You can say whatever you want on your Facebook posting, and they can't police that. But if they're accepting money for it, they should probably be held to some standard for that. It's advertising.
I was looking at the Washington. There's a John's.
But hold on. If it's wrong, whether it's an advertisement or not, does that change anything? Meaning, if I was running for mayor of New York and I started just posting things that were blatantly inaccurate.
I think that's a tougher situation to try and assess. Right. That's where you can make the claim that you are simply a posting board and that these things get up. But for anything you're accepting ads for, why aren't you held to the same standard as other broadcasters would naturally be for that? You're accepting advertising, so there is some interaction. You're accepting money.
What are you laughing about over there?
Big Bad Wolf, lung capacity legend and bacon enthusiast. Dead at 6. There's some that you really can't repeat on here. I just saw one for Ted Bundy. But how many are there? There are literally thousands of these. People, I'm surprised on Twitter, too.
I missed it. I'm on a different version of Twitter than you are. Coming up when we return, a lot more.
This got a lot of...
Really?
So, yeah, so you're like...
The CNBC program is sponsored by Capgemini.
I've got to tell you about our beautiful city break in Bath. Midweek is the perfect time to beat the crowds. Just an hour and a half by train from London. It was so relaxing. We headed straight for Bath Christmas Market. Oh, I can still smell the roasted chestnuts and mulled wine from the chalets. Then it was time for glow-in-the-dark mini-golf. I got a hole-in-one. Well, 3. I'm a bit rusty, okay? There's so much to do in Bath. I'm already planning my next trip.
Discover the magic of Bath this Christmas. Plan ahead at visitbath.co.uk/Christmas.
Why is Lizzie going rental for Fizzy Haze? Is it because her flat is so beautiful and spacious? Snazzy! Or has roof terrace, garden and party room? Surprising! Or because it's 18 minutes to Paddington? Easy! With friendly staff on hand to take any deliveries? Amazing! Or just because her fuzzy friend can live there too? Find your new home at fizzyhaze.com. Fizzy Living, reinventing renting.
What if your email let you see a project's entire history and not just the messages sent to you? What if everyone else on your team could see it as well? Then it wouldn't be email at all. Move communication from inboxes to channels in Slack. Instead of seeing a partial set of messages about a project, everyone in Slack sees exactly the same thing and moves work forward faster. Slack. Choose a better way to work. Get started at slack.com.
They don't chant your name when you give blood or sing songs about you. But patients and their families will remember you forever. Because your blood can change their lives. We need more blood donors in Tooting, the West End and Edgware. Bleed for London. Join us today at blood.co.uk.
You're in charge of hiring and Indeed has solutions, like online skills tests, which let a candidate show that they are the right hire. And we give you this toy monkey, who will bang its cymbals when the right CV appears on your desktop. Okay, there is no monkey. There is no monkey. But there are online skills tests.
See why more than 250,000 companies in the UK use Indeed for hiring. Visit Indeed.com/try today to try skills tests for free today. Terms and conditions apply.
Welcome back to Squawk Box. Time for the Squawk Planner this morning, and it is a monster mashup of earnings, economic data, and the Fed. Today, we're going to be hearing from AT&T and Walgreens. We'll get that before the bell, and Google after the close. Also on the earnings calendar this week, we're going to hear from Merck. We got Pfizer coming up. The biggie, we are always going to be hearing from Apple and Facebook, Chevron and Exxon. And then, by the way, the Fed meets tomorrow with a rate decision due on Wednesday. And then on Friday, we get the October jobs report. Joining us right now to talk about strategy ahead of all of these events is Matt Toms, he's CIO of Fixed Income at Voya Investment Management. Also, Catherine Rooney Vera, head of Research and Chief Market Strategist at Baltic Capital Markets. Good morning to both of you. Let's start with you, Matt. Ahead of all these numbers, I don't know, you focus more on the numbers, you focus more on the Fed, first of all?
The Fed's first. We need the Fed to stay ahead of the market expectations. The steepening of 2s10s is useful, up to 18 basis points. Finally, the Fed's not behind. The Fed will cut this week and then look for one more early next year. But the key is to keep ahead of the market.
And what happens if they don't?
If they don't, I think you're going to see a pretty negative response. You've seen the dollar weaken a bit. That's helpful. You don't want that retrade higher in the dollar. And the global bond structure has been trying to move higher in yield in Europe as well. So this would be the Fed fighting the market if it did it. We don't anticipate they'll do that.
Catherine, you think they will or they won't?
Of course the Fed is going to cut rates, Joe. I mean, when has the Fed not cut rates when Fed fund futures are pricing in more than a 60% probability of said cut? So the Fed is married to the market expectations. The Fed will cut. That doesn't mean that the Fed will cut the three additional 25 basis points that are currently priced in. But Wednesday they will. I agree. I think that if the Fed doesn't cut those 3 times, it will be a negative reaction by the markets. If the Fed even sounds slightly hawkish this week and indicates that it may not have to cut, which it really doesn't, 3 times in total, then the markets will not like that either.
So
that
Catherine,
said, I do think that we're going to have record highs.
I think it cuts this week, but that the commentary is going to be a little bit more hawkish than the market wants, in which case it becomes a problem. Therefore, my question to you is, if we're in the same place, what are you doing about it in terms of how you set up your portfolio ahead of all of this?
Yeah, it becomes a problem for the markets, but yes.
Yep.
Yeah, it becomes a problem for the markets, but it's actually a boost to the credibility of the Fed. So, yeah, look, I think what I've been telling my clients is it's a really good idea to protect your upside, protect your returns. So you pay, volatility is very low right now. You can buy a March expiry put option, which gets you through multiple Fed meetings, Iowa and New Hampshire caucuses and primaries, first week of February, and Super Tuesday. So you can get through both political risk and Fed risk, which, by the way, I think is the most important risks in the market right now. It's not trade war, it's not U.S. recession. Those 2 narratives, I think, have been pushed to the back burner. And in fact, I've been outside of the recession camp for some time, and I do think we're going to get a framework deal, as I've said, for a very long time with China. So buy some put options. You just forfeit less than 4% of your return. To buy that put option, you protect yourself, and you don't have to be outside of the markets. Worst case scenario, Joe, you just let that put option expire.
Matt, you agree with that?
I think there's too much passive money on the sideline right now. There's a lot of caution in the system. People have made a good amount of money this year. I think the pain trade is actually to see equities push higher, bond yields a bit higher as well, and start to crowd in some capital that's looking for the clock to run out on the year, and it says nice gains. Look for people to be pushed in.
Hold on. So you think that the Fed's going to cut and the market's going to go up on that, or you think it's already baked into the cake?
I don't. I think the yield curve can steepen more. I think you've got areas of weakness in the senior bank loan market, for example, that will take a cue from the Fed and from earnings not being a problem. I think you can crowd quite a bit more in.
And then real quick, just in terms of earnings, because I know we keep having conversation about whether a recession's coming, whether the numbers will be good. So far, the numbers have been pretty good. The question is really what you think the guidance is going to be from a lot of these companies that we're hearing from today and throughout the rest of this week, and what that portends for the next quarter and the next year. Matt?
Yeah, guidance continues to be subdued, but still positive. So an earnings kind of morass is not the worst case scenario. We get some abatement on Brexit and trade, and I think that early next year you can turn a bit more positive.
Catherine, are you positive for 2020?
Look, I think what Matt is talking about is that trifecta of what can produce a melt-up, which is, of course, a trade deal, which is, of course, continued earnings growth, pointing to a very strong picture, and Fed cuts. So what is a melt-up? Can we get to 3,100? We probably can, but I do think that going into 2020, with the volatility in the markets, with the political risk coming from the left and the Democratic side, from the right with the impeachment process, from a Fed that perhaps disappoints the markets, I just think it's prudent to protect your gains. And it's not something that we're saying liquidate your portfolios. We're saying hold on to your S&P. We do think you can go higher from now through year end, but I think 2020 is worthwhile to get more defensive.
Okay. Matt and Catherine, thank you guys. Appreciate it very, very much.
My pleasure. Thank you.
When we return, today's biggest stock stories, including an e-commerce play and the first publicly traded space tourism company. Squawk Box will be right back.
Take your protein pills and put your helmet on. 10. Ground control 9, to Major Tom. 8, 7, 6, 5, 4.
This CNBC program is...
I've got to tell you about our beautiful city break in Bath. Midweek is the perfect time to beat the crowds. Just an hour and a half by train from London. It was so relaxing. We headed straight for Bath Christmas Market. Oh, I can still smell the roasted chestnuts and mulled wine from the chalets. Next, we donned our skates for Bath on Ice. I'm a natural. Didn't have to hold on to anything. Or anyone. There's so much to do in Bath. I'm already planning my next trip.
Discover the magic of Bath this Christmas. Plan ahead at visitbath.co.uk/Christmas.
What if your email let you see a project's entire history and not just the messages sent to you? What if everyone else on your team could see it as well? Then it wouldn't be email at all. Move communication from inboxes to channels in Slack. Instead of seeing a partial set of messages about a project, everyone in Slack sees exactly the same thing and moves work forward faster. Slack. Choose a better way to work. Get started at slack.com.
There's something for everybody this Halloween at Aldi. Dead good sweets, decorations, face paints. Be afraid. Be very afraid to miss out on these shockingly low prices. In store now. Everybody get to Aldi for an amazing Halloween.
Halloween's back.
I've always loved a kitchen experiment, especially smoothies. I've blended all sorts of mad combinations. Strawberry and charcoal, broccoli and chocolate. Not my best, that. But when I test blenders in the Witch Lab, it's not about flavour, it's about performance. Our tests use proper tough stuff, hard ice, strong veg, rough nuts. And the blenders that can hack it are the only ones we recommend for your kitchen.
Which tests harder so you can buy smarter. Visit which.co.uk.
London. Switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
To succeed in small business, you need technology that runs efficiently. When you partner with a Dell Small Business Technology Advisor, you get advice, one-on-one partnership, and tailored productivity solutions, including computers with Intel Core processors, servers, storage, networking, plus industry-leading monitors and accessories. It's how they help your small business make the most of every minute. To speak with an advisor today, call 0800 085 4878. That's 0800 085 4878.
What can you get from Tesco for £1 each this Halloween?
A pumpkin.
More.
A spooky pumpkin cup.
More.
Ghostly balloons. Spine-tingling spider webs. Ghoulish plates and napkins.
More. Yes, it is scary what you can get for just £1 each this Halloween.
Tesco. Every little helps. Available in selected larger stores.
Sean, tell us about your upcoming Shaun the Sheep movie.
Oh yeah, that was a good bit.
Really? I never looked at it that way. Wow, you do your own stunts. Wait, that's my line. See Farmageddon, a Shaun the Sheep movie, as part of your year of endless adventures with Meerkat movies. Oh, spoiler alert. You just gave away the ending.
Qualifying purchase required. Tuesdays or Wednesday. Participating cinemas. Standard ticket only. Cheapest ticket free. One membership for 12 months. Conditions apply.
And we're watching shares of Spotify this morning. The music streaming service reported an unexpected profit for its latest quarter. Revenue also came in above analyst forecasts, as with monthly active users up 30% and premium subscribers are up 31% from a year ago. You can see it's been a bit of a roller coaster for that stock, but right now it's trading at $123, up about 2% on that news.
Other stocks to watch, they're moving this morning. Europe's largest lender says its pre-tax profits fell 18% from last year. HSBC said those third quarter results came in that way despite strength in Asia, specifically noting resilient performance in Hong Kong. The bank said its European performance was unacceptable and it will accelerate its turnaround plan. And a commercial real estate deal, Prologis, the warehouse giant, has agreed to buy rival Liberty Property Trust for $12.6 billion, and that deal could help expand Prologis' presence in the U.S. Amid the boom in e-commerce. And New York's insurance regulator has launched a probe into United Health. The Wall Street Journal says the investigation focuses on an algorithm used by the company that allegedly prioritized care for healthier white patients over sicker black patients.
What? Wow. All right, this morning, investors will get their first chance to buy into the next stages of mankind's space endeavors. Shares of Richard Branson's Virgin Galactic will officially list on the New York Stock Exchange, making history as the first and only commercial space tourism company to do so. This isn't an IPO. Virgin Galactic is merging with a SPAC that's run by Chamath Palihapitiya. It's going to be trading under the ticker symbol SPCE. And the New York Times reports that Boeing helped to craft a law late last year that undercuts the U.S. government's role in approving the design of new airplanes. The report says that the company and its allies shaped the language of the legislation to their liking, overcoming criticism from regulators, including the FAA.
But we're coming back in a second. It's...
What do you think, by the way, Muhlenberg is going to be testifying this week. So he's going to be having to answer a lot of these questions
and so many of the issues
and so many other things as well.
Too.
But the whole idea of self-regulation, which is a huge part of what's happening in the airline industry, is fascinating. And by the way, not just happening, I discovered, because I started looking into this over the weekend, not just happening in the United States. A lot of this is because Airbus and what's happening in Europe is following a similar approach.
Look, I understand the argument that there may not be qualified people in the government to sign off on some of these things, but it argues for a change in structure. If Boeing or Airbus is going to pay for it, they should ultimately answer to the regulators, not
And you also had members of the FAA writing letters saying this is not the way to do it.
Right. Right. And I think the biggest question in this is, even if the government has issues about safety, this gives the manufacturers an upper hand in this particular legislation.
Exactly.
We're playing this.
Your favorite song.
No, we could have been playing Big Old Jet Airliner for your discussion, but in this case, we're talking about the Joker. The name of the song at the box office. I'll tell you about how that
beat out a movie called Maleficent.
Maleficent rolls right off. I just can't believe that a headline in the Journal is Popeyes is bringing back a spicy chicken sandwich. One of the headlines.
It's a headline in the Tempo.
We got to get one of these. I mean, if it deserves to be, if it's a headline,
good luck.
It's impossible to get a stupid spicy chicken sandwich from Popeyes.
It's been sold out for so long. That's the marketing genius in this.
All right, as we head to break, here's a look at Friday's S&P 500 winners and losers.
Old Dominion has...
I've got to tell you about our beautiful city break in Bath. Midweek is the perfect time to beat the crowds. Just an hour and a half by train from London. It was so relaxing. We headed straight for Bath Christmas Market. Oh, I can still smell the roasted chestnuts and mulled wine from the chalets. Next, we donned our skates for Bath on Ice. I'm a natural. Didn't have to hold on to anything. Or anyone. There's so much to do in Bath. I'm already planning my next trip.
Discover the magic of Bath this Christmas. Plan ahead at visitbath.co.uk/Christmas.
Whatever job you're searching for, you can find it on LinkedIn. First jobs, flexible jobs, work from home on a Friday jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, Soho jobs, Shoreditch jobs. Keep me away from the central line jobs. Banking jobs, building jobs, never ever boring jobs. Small jobs, big jobs, London Borough Market jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
Why is Lizzie going rental for Fizzy Haze? Is it because her flat is so beautiful and spacious, snazzy? Or has roof terrace, garden and party room? Surprising! Or because it's 18 minutes to Paddington? Easy! With friendly staff on hand to take any deliveries? Amazing! Or just because her fuzzy friend can live there too? Find your new home at fizzyhaze.com. Fizzy Living, reinventing renting.
They don't chant your name when you give blood, or sing songs about you. But patients and their families will remember you forever. Because your blood can change their lives. We need more blood donors in Tooting, the West End and Edgware. Bleed for London. Join us today at blood.co.uk.
There's something for everybody this Halloween at Aldi. Dead good sweets, decorations, face paints. Be afraid. Be very afraid to miss out on these shockingly low prices. In store now. Everybody get to Aldi for an amazing Halloween.
Halloween's back, alright.
Time is money. Or so money says. Well, money. I know you like to dictate every hour of every day, add to my to-do list and throw the odd spanner in the works. But not anymore. This is my business, and I run it on my watch. I'm in control now, money, and times are changing. Save time with instant business invoicing, now on the Barclays app. Search Barclays Business and make money work for you.
Must have a Barclays business account. T's and C's apply.
Welcome back. You're watching Squawk Box, live from the NASDAQ market site in Times Square.
Good morning. U.S. equity futures at this hour are solidly higher. Again, I don't know if we refer to it as a melt-up, but it certainly seems like the default position most mornings. You do see the futures a little bit stronger. Dow Jones up about 74, the S&P up 6. If you round up, and the NASDAQ
S&P, if
up
we were to open
23.5.
at this level.
New high.
New high, yeah.
Gasoline prices have fallen by 4 cents a gallon over the past 2 weeks, according to the latest Lundberg survey. That puts the average price at $2.68 a gallon. And the weekend at the box office, Joker reclaimed the #1 spot, 18.9 million in North American ticket sales. It had been pushed out of the top spot last week by Disney's Maleficent, Mistress of Evil. Joker is now the most successful R-rated movie ever, with a global take of $849 million. You're from Manhattan, and there's those stairs in Brooklyn that everyone's going and taking selfies. Have you seen that as well?
Those stairs that we just saw?
Did they just show? I was looking over here. Yeah, where he does some kind of weird, scary.
I have not seen this movie.
It's like the stairs in Georgetown.
There's people that are around. Yeah, exactly.
From
The Exorcist.
The Exorcist, right.
But like all the neighbors in Brooklyn are like, go away, would you? You can imagine how many people are taking shots. So far so good with this scary, sick movie, right? I mean, he's very talented. That guy's a whack job, but he's right.
Yeah.
But he's very. What's that? Yeah,
just like you.
Yeah, right. Yeah, I'm very talented and a whack job. I don't know about the talent part, but I'm.
All right. When we come back, today's top media stories. We will bring you the latest on Facebook's fight against fake news and what's heating up in the streaming wars next. And at 8 a.m. Eastern Time, don't miss our interview with Squawk newsmaker Ben Carson, Secretary of Housing and Urban Development. Stay tuned. You're watching Squawk Box on CNBC.
There's golf.
London, switch to Vodafone, the UK's best mobile network, and V Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Hey, you. We didn't make Nature Valley crunchy bars so you could just sit and scoff them in front of the TV. Not when you could be enjoying them outdoors. Up here!
Race it to the top!
With 100% whole grain oats and delicious honey. Nature Valley Crunchy. Get out more.
Hi, I'm back. I just set a personal best on my park run. Feels great.
That's lovely, Mike. I think you've earned the right to put all the bins out.
Hey?
With Vitality Life Insurance, you get properly rewarded when you're active. In fact, you could save over £730 every year in discounts and rewards from our partners. Join over 1 million customers. Just search Vitality Life. Vitality. Positively different. Annual savings available with certain plans and are dependent on members' usage of rewards available. Terms and conditions apply.
To succeed in small business, you need technology that runs efficiently. When you partner with a Dell Small Business Technology Advisor, you get advice, one-on-one partnership, and tailored productivity solutions, including computers with Intel Core processors, servers, storage, networking, plus industry-leading monitors and accessories. It's how they help your small business make the most of every minute. To speak with an advisor today, call 0800 085 4878. That's 0800 085 4878.
Sean, tell us about your upcoming Shaun the Sheep movie.
Oh yeah, that was a good bit.
Really? I never looked at it that way. Wow, you do your own stunts. Wait, that's my line. See Farmageddon, a Shaun the Sheep movie, as part of your year of endless adventures with Meerkat Movies. Oh, spoiler alert. You just gave away the ending.
Qualifying purchase required. Tuesdays or Wednesday. Participating cinemas. Standard ticket only. Cheapest ticket free. One membership for 12 months. Conditions apply.
Hello? This is Dustin. I found something. Is anybody there?
We hear you, Dustin. With Sky Q, you can easily catch up on epic Netflix shows like Stranger Things and then watch award-winning Sky originals like Chernobyl. Get Sky and Netflix all in one place on Sky Q for one surprisingly low price. Just £25 a month. Visit sky.com and join today. Offer ends November 14th. 18-month minimum terms. Prices may change during contract. Requires Sky Q box connected to broadband. Set up from £20. Further terms apply.
Hurry to TradePoint. The 3 for 2 on all paint offer ends this Sunday. Plus, if you have loyalty discount, you'll get this on top. From Dulux Trade to Leyland Trade. Don't miss 3 for 2 on all paint at TradePoint. Every third item per single transaction in descending price order free. See tradepoint.co.uk.
Welcome back, everybody. Facebook removed an ad from its site over the weekend from a political action committee, falsely saying that Senator Lindsey Graham supported the Green New Deal. A Facebook spokesperson said that because the ad came from a political action group rather than a politician, it was eligible for Facebook's fact-checking review. Joining us right now to talk about this and other media stories is Joanne Lippman, journalist and distinguished journalism fellow at the Institute for Advanced Study in Princeton. Also, Ed Lee, who's corporate media reporter at the New York Times. Both of them are CNBC contributors. And Joanne, what do you think? This is kind of getting into fine lines. How do you figure this out, where it's coming from? I mean, to me, if you paid for advertising, why don't you fact check it like any other broadcaster would?
100%. I mean, what we're seeing here is how difficult this policy will be to enforce. Facebook says we're not going to check political ads from politicians, but we are going to fact check other things and take other things down. Now, if you are a Facebook user, are you making that distinction? No. You're seeing sort of all of this information coming at you. So Facebook has been incredibly inconsistent in how it handles fact and fiction on its site. It's going to have to make a change.
The lines that they're drawing in terms of what they will and won't fact check just really seem arbitrary to them. It seems like sort of, well, for this we'll do this and for that we'll do that. And as Joanne pointed out correctly, like readers aren't going to know the difference about how the context around what they're viewing.
Do you think Facebook wants regulators to come up with a solution with this?
You think that there's this, well, we're confused ourselves, so please come in and help us sort this. No? Right. I think there's, the section of the Telecommunications Act, section, 230, that's the thing that everyone's looking at in terms of how will that be revamped or revised. That could hold platforms like Facebook liable for the content that's on there. I think they're saying, look, we'll do what you want. We'll be there to meet that demand. Yes, I do think they want some kind of regulation. I think they think some kind of legal sort of framework in place so that it's easier for them to make those calls.
So the onus is not on them to come
That's
up
the thing.
with a legal framework
they
that
don't want the onus.
Right.
They don't want the onus to be on them. It's not just them. It's YouTube and Google and
and Twitter for that matter, too.
But they also don't want to be seen as a content company. I mean, Ed's right about the Section 230 of the Communications Decency Act, which is what allows them to be seen as essentially telephone wires, not responsible for the content.
Right? It goes back to that CompuServe.
Yes.
Ruling from way back when. You're a posting board, but if you are accepting money for any ads that go on, that seems like it's a different standard.
Well,
you have some involvement already if you're accepting money on that.
That's right. And if you are a television broadcaster, if you're a newspaper, if you're any other sort of media company, you're held liable for the content that you run. And so you're going to reject the ads that say that
flat out factual,
that are factually absolutely incorrect, right? You're going to do that. That's your responsibility. And it's very, very confusing to the ordinary consumer who's reading the newspaper, seeing television, and then looks at Facebook, and Facebook has a totally different point of view. They don't understand. We need guardrails here to understand sort of fact versus fiction.
From Facebook or guardrails from regulators?
I think that's the big question, and that goes to the heart of whether Facebook ultimately is viewed as a content company. And increasingly, it is moving more toward being a content company. If you look at, it's hired now journalists. It's hired fact checkers for other sorts of
And we should also note that they recently cut a deal with a bunch of news organizations, including like Wall Street Journal, New York Times, other websites, to basically ingest headlines and summaries of news articles that will appear in this new tab on the Facebook, so the news tab. So they're paying for the content now, actually, right?
They're starting to pay for the content, but they're also choosing the content.
They're choosing the content.
That, in turn, tells you that they're doing the function of an editor, and an editor is in a content company.
But some of it's being paid for, and some of it as some of it is not being paid for. Breitbart may not be. Separate question, because we were talking about the FCC and others who regulate certain types of advertising. How often is it that television networks or others get fined by the FCC for broadcasting advertising which is inaccurate? Does anybody know?
Well, I think, first of all, broadcasters have a slightly different set of rules around that relative to, say, cable networks.
Okay,
right? So that's a slightly different thing. But
how often is this actually policed?
I don't have figures on that, actually. That's a good question. But they doggedly look at it.
I have a suspicion that it's actually not as much as you'd think.
But they also are far more proactive, right? Cable and network are far more proactive than Facebook.
And they're not as, it's easier to find and to review. It's not like Facebook where there's tons of political advertising or issue advertising that appears and you just don't know half the time where they are. And so there's all this analysis has to happen just to see if these ads appeared, who they came from. Was it a politician? Was it a PAC? Was it some other organization that you might consider an issues ad? So again, it's so much more stuff happening. It's harder to police. It's harder to get a sense of. There needs to be legislation. There needs to be a way to understand and tick through all of these things and decide what's fair game and what's not fair game. It comes down to, is it a content company? Should they be liable? Right.
We are also expecting results from AT&T any minute. We may get some guidance on the company's activist battle with Elliott Management as well. What should we be on the lookout for, Ed?
So Elliott, they took about a 1% stake in the company, which is one of the smallest sort of stakes in terms of campaigns they've taken in the past.
Right. It's a $270 billion market cap.
It's massive. It's a massive company. They wanted some better corporate governance. They wanted a more specific business plan. How are you going to figure out this media thing? They bought Time Warner last year. They bought DirecTV a few years ago. Doesn't seem to be working, or it's not clear how that's supposed to be working. So that's what they want some response on. Maybe sell DirecTV. I think we're going to see some.
Is it pay down of debt? Is that they're looking for?
Pay down of debt.
The company has been kind of clear about what its plans have been. They want it faster, or
capital allocation, paying down debt. I think is a huge thing for Elliott. I think there'll be more visibility on that. I think AT&T has signaled some of that in recent weeks. I suspect my sources tell me that there might be something on corporate governance, board directorships. Randall Stevenson's tenure as well could be a factor of this. So I think that will be their response. We'll see some kind of response. Whether it's something that Elliott fully buys into, not entirely clear. But I don't think AT&T would make this announcement if there wasn't some kind of agreement with Elliott.
This would be something that they hadn't discussed with Elliott?
Oh, no, they're definitely been talking. They've been talking for weeks. They've been negotiating. So we'll see some kind of resolution.
The big picture here really is Elliott Management has been questioning this purchase of Time Warner, now Warner Media, to say, is this the right pivot for you to go so into, fully into content, right? But they've been questioning that. Should you be, DirecTV has been hemorrhaging subscribers, right? So was that the right move to purchase that? I think that there are some
like they bought it at sort of the worst possible time you could buy a satellite operator, where cord cutting was really coming to the fore, and unlike, say, a cable business where they have broadband service, where you as a consumer still need the internet, even if you don't want the video. For satellite, like, it's either video or nothing. So if you're going to get rid of your video account, there's no need to have satellite.
Although I thought the concern, Andrew, I think you've talked about this, the concern was that free cash flow. That
was always mine.
So DirecTV generates tons of free cash flow.
So this was always the issue of how quickly you can get rid of it. Because it is a melting ice cube to some degree, or to a large degree, but it's a big ice cube.
But it's a big ice cube also, a big part of AT&T's sort of their value system is going to be around their dividend, right? So if you're in that stock, you want to make sure that dividend's met. The cash flows helps from DirecTV. Also, who are you going to sell it to, right? If you want to offload DirecTV, the question mark becomes, maybe someone likes the cash flow. Maybe a PE firm comes in and grabs it. The most obvious one would be a partnership with Dish, but then you get into regulatory issues, right? I think that's something that AT&T had explored before, that even they were like, I don't think that's going to work, so let's keep it. Let's take advantage of it with their new streaming service that they're coming out with, announcing tomorrow, the HBO Max. They'll have more details on what that's going to be, the pricing of it. That'll be important for them.
That stock still yields 5.5%.
Yeah, it's still not a bad thing to have. I think Elliott wants more. I think it's not bad to want more, or better visibility into their planning. Hopefully that they'll offer some details on that.
The estimate is for 93 cents, and we expect to see those earnings just about any time. But Joanne, Ed, want to thank you guys for being here today. It's good to see you.
Great to see you.
All right, coming up, some legislators are calling for U.S. divestment from Chinese companies. Our next guest will tell you why investing there may be the best move for your money, though, right now, as we head to break. Here's a quick check of what's happening in the European markets right now. You can see a little bit next. Let's see that.
When you need to see up close, do you...
Whatever job you're searching for, you can find it on LinkedIn. First jobs, flexible jobs, work from home on a Friday jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, Soho jobs, Shoreditch jobs. Keep me away from the central line jobs. Banking jobs, building jobs, never ever boring jobs. Small jobs, big jobs, London Borough Market jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Hello? This is Dustin. I found something. Is anybody there?
We hear you, Dustin. With Sky Q, you can easily catch up on epic Netflix shows like Stranger Things, and then watch award-winning Sky originals like Chernobyl. Get Sky and Netflix all in one place on Sky Q for one surprisingly low price. Just £25 a month. Visit sky.com and join today. Offer ends November 14th. 18-month minimum terms. Prices may change during contract. Requires Sky Q box connected to broadband. Set up from £20. Further terms apply.
What can you get from Tesco for £1 each this Halloween?
A pumpkin.
More.
A spooky pumpkin cup.
More.
Ghostly balloons. Spine-tingling spider webs. Ghoulish plates and napkins.
More. Yes, it is scary what you can get for just £1 each this Halloween.
Tesco. Every little helps. Available in selected larger stores.
Trick or treat!
Oh, sorry, this is a Vauxhall Network Q retailer.
But your sign says no tricks, just treats.
Well, yeah. Treats like a £1,000 deposit contribution on an approved used SUV at 9.9% APR representative.
I'm telling my mum.
Well, get her to hurry. Offer ends on November the 4th. And don't forget our 1-year warranty and roadside assist. No tricks, just treats. Search Network Q. Because buying a used car shouldn't be scary. Personal contract purchase, subject to status, T's and C's apply. 18 plus only, Vauxhall Finance.
Your new neighbour is a musician. His creative peak is at 3 a.m. They're doing roadworks next to your house. Your dog thinks he's a wolf at night. There's always a reason to travel. Fly with Lufthansa's incredible fares around the world. For example, to Bangkok, Shanghai, or Singapore. Book now on Lufthansa.com. Conditions apply.
Say yes to the world. Lufthansa. Hey NFL fans, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you have unlimited access to every team and every game in the league. Listen live as it happens or on demand. Anytime, anywhere. All season long. Search NFL today.
Deep left center field. A grand slam!
October baseball is here, and TuneIn Premium is your ticket to the 2019 MLB postseason. Featuring the home and away feeds for every game, TuneIn Premium delivers every call of the ALCS, NLCS, and the 2019 World Series through the voices of the local radio broadcast teams.
In the air, left field and deep. He's at the wall!
Now until a new champion is crowned, hear every play of the 2019 MLB postseason live on TuneIn Premium. Upgrade today.
A bipartisan group of legislators are pushing for divestment from Chinese companies. Here's what MSCI CEO Henry Fernandez had to say on Friday about the criticism.
We definitely create the tools for people to then use them to figure out what are their decisions, because we cannot tell investors what decisions to make. We offer choice. We offer investors choice for them to decide what they would like to do.
Joining us now is an investor who says Asian stocks may actually be a safe haven for slowing growth. James Tom is investment director at Aberdeen Standard Investments. You're based in Singapore.
I am.
And just looking through a lot of your comments, we need to return to the realization that the fastest growing region of the world is the Asia Pacific. Even after accounting for all these things, that 63%, you point out, 63% of global economic growth and purchasing power is generated in the Asia Pacific. So even with all these other tensions and geopolitical concerns in the backdrop, it's a fast-growing area where valuation has come down because of these other factors. So buy. You don't need to be here.
Yes.
You don't need to be here. Yeah.
Thank you.
Yeah, you're welcome.
No, it is the world's fastest growing region. I think the IMF recently published a report forecasting over 5% GDP growth for 2020. So that's fueling, if nothing else, a strong consumption story in Asia. I think for the most part, you look at corporates in Asia from a more bottom-up perspective, we see companies with healthy balance sheets that can, for the most part, weather the macro headwinds, and of course there are headwinds. So from a fundamental perspective, I think Asia still looks pretty compelling. And as you say, from a valuation perspective too, the region is trading at a significant discount now, with certainly relative to the rest of the world and to the US markets hitting all-time highs. I think we will see a rotation into Asian equities.
And your base case doesn't even include any type of resolution to any of the trade issues. You're assuming that doesn't happen and still recommending these stocks.
Yes, I think clearly if we have a deal struck on that, then clearly markets.
What do you mean that the orthodoxy of monetary policy in Asia means that it's better positioned than Western peers? They have more room to ease?
They do. So I would argue that Asian central banks and governments have pursued orthodox policies. So there was never the raft of quantitative easing from 2008
So they have
onwards.
that left.
So interest rates are still high, and that gives them the flexibility now to cut and to support fading economic growth. And on the fiscal side too, balances are reasonably healthy. So there are tools in the toolkit to respond to short-term weakness in economic growth.
I hate to interrupt, but let's tell you about AT&T earnings that have crossed now. Adjusted earnings came in at 94 cents a share. That was a penny better than the street was expecting. Revenues slightly above or slightly below forecast, but the real news here is the 3-year financial guidance and capital allocation plan that they've put out. They're now looking at adjusted earnings per share growth of $4.50 to $4.80 by 2022. If you look at the street's expectations for that, the street was at $3.59. They say that does include the HBO Max investment. They expect revenue growth every year, 1% to 2%, over the 3-year period for that. They are also looking at dividend growth. They're looking at continued modest annual increases, dividends as a percent of free cash flow, less than 50% in 2022. Capital allocation, 50 to 70% of free cash flow post-dividend from retiring about 70% of shares issued for the Time Warner deal. They expect to pay off 100% of the acquisition debt from the Time Warner deal, I believe, by 2022. And for the portfolio review, this has been so talked about by Elliott Management, the things they were pushing for. They are saying continued disciplined review of portfolio with no major acquisitions. That does not mention anything about what they may or may not spin off down the road. For the board, they say continued board refreshment with one prospective new director to be considered at the next board meeting and another in 2020. The CEO transition, Randall Stevenson, the CEO transition is not expected in 2020. It does not lay out when they would expect to see that, but it would not be this year or next.
You tell me, is this placate Elliott Management and investors who were looking for
well, if you're looking at the adjusted earnings per share growth, if you believe it, for 2022, that's a big increase in what they would be expecting to earn by 2022. Dividend growth. I mean, if you had any questions about what was going to happen to the dividend, they are expecting continued modest annual increases.
Less than.
Yeah. So I guess
less
if
than
you're looking at
50% of free cash flow.
Right.
Stock is up almost 2%. So if you take that as any indication. All right, we'll get back to that, but let me get just finishing up with James on China here. We think of the United States as an advantage because we can be a domestic economy and maybe be okay without China, or they have more to lose. You point out China is well on their way to being a domestic economy in terms of a rising middle class and less exports and more consumption. Really? Are they? Because that's the question. It's taking a while.
It's taking a while. It's a big ship to move, but that transition is already happening. I think if you break down the GDP, you can see that services and domestic-focused sectors are now more than 50% of GDP. So that transition is happening. It's been going on for a number of years, and it will continue and help insulate it from the trade.
So how would a normal investor in this country decide to do that, with ETFs or something for domestic Chinese equities?
Well, we run a domestic active fund, and I think actually an active approach is the right approach to these markets rather than buying into a passive ETF.
Really?
I think you have to be selective on the companies. It is a relatively riskier market. Plenty of people have lost money in the Chinese equity market. So being selective, picking stocks with good, strong fundamentals, healthy balance sheets and cash flows, I think is the right approach for that market.
There is an Elliott Management note that's out right now saying that they are supportive of the AT&T announcement. They are looking for the separation of the chairman and CEO roles, but not until the CEO transition takes place, which AT&T said will not take place.
Will not take place in 2020. So the question is, when will that take place?
James, thank you. David,
thank you.
We appreciate it. We got two different tracks happening right there. That's okay. And the stairs are in the Bronx, not in Brooklyn.
Okay, we'll talk more about the stairs. We'll also talk about AT&T when we come back. We'll get you ready for a very busy week on Wall Street, including a flood of earnings, a Fed meeting, and the jobs report, all ahead on Squawk Box in the next 2 hours.
What's Working is sponsored by Comcast.
When it comes to music, I've heard it all. Pink Floyd, Sean Paul, Slipknot. But in the Which Test Lab, hearing isn't enough. When we test headphones, we really listen. Not just to the music, but to the stuff that gets in the way. The traffic, the chatter, all that. Mind the gap. We simulate the loudest commute to find you the headphones that cancel out the noise. So you know we're only recommending the best.
Which tests harder so you can buy smarter. Visit which.co.uk.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
The nights have started to draw in. And at DFS, we know that can only mean one thing. Everyone will want to spend more time at home, getting nice and cozy. Ah, you can't beat it. That's why all our sofas are handmade to order, and many are guaranteed to be delivered in time for Christmas. So you can look forward to cozying up this winter, knowing your new sofa won't let you down. DFS.
What can you get from Tesco for £1 each this Halloween?
A pumpkin.
More.
A spooky pumpkin cup.
More.
Ghostly balloons. Spine-tingling spider webs. Ghoulish plates and napkins.
More. Yes, it is scary what you can get for just £1 each this Halloween.
Tesco. Every little helps. Available in selected larger stores.
Hello? This is Dustin. I found something. Is anybody there?
We hear you, Dustin. With Sky Q, you can easily catch up on epic Netflix shows like Stranger Things and then watch award-winning Sky originals like Chernobyl. Get Sky and Netflix all in one place on Sky Q for one surprisingly low price, just £25 a month. Visit sky.com and join today. Offer ends November 14th. 18-month minimum terms. Prices may change during contract. Requires Sky Q box connected to broadband. Set up from £20. Further terms apply.
Hey, NFL fans. Can't watch the game? Can't be there? We've got you covered. With TuneIn Premium, you can hear every NFL game live as it's happening, or catch it later on demand. Anytime, anywhere. All season long.
Rally cap ready.
That is hammered into left.
Stocks quietly climbing to new highs. The S&P now within just a handful of points from its all-time record.
Market flash. AT&T kicking off the busiest week of earnings season. The media and telecom company's quarterly results. An instant market reaction straight ahead.
Plus, it's your money, your vote. One of the architects of Elizabeth Warren's wealth tax proposal squares off against a supporter of President Trump's economic plan. As the second hour of Squawk Box begins right now.
Live from the beating heart of business, New York, this is Squawk Box.
Good morning and welcome back to Squawk Box right here on CNBC. We're live at the NASDAQ market site in Times Square. Manager Ross Sorkin along with Becky Quick and Joe Kernan. Take a look at U.S. equity futures ahead of what's going to be a very busy week, both in terms of earnings reports. We already got AT&T coming in this morning, and we're going to be hearing from the Fed later this week. Dow Jones looks like it would open up about 73 points higher. NASDAQ looking to open about 25 points higher. S&P 500 looking up about 6 points right now.
In the headlines this hour, Microsoft winning a $10 billion Pentagon cloud computing contract. Amazon had been favored to win the contract, said it was surprised by the decision. It can appeal the outcome, but hasn't decided whether or not to do so. AT&T just out with its quarterly earnings. The company reported 94 cents a share, a penny ahead of estimates, and revenue was just slightly below analyst forecasts. The company also unveiled its outlook for the next 3 years, seeing revenue growth every year and also planning on continuing modest dividend growth, yielding over 5% right now. And Tiffany shares are surging in pre-market trading. French luxury good maker LVMH has approached the company about a possible takeover. Didn't give financial details, but multiple reports say the potential bid is worth about $120 a share, about $14.5 billion.
Look at that. The street thinks it's going to be more. It's already up at 127 and change.
Well, based on this idea, $136 is where the stock used to be. It's the only way.
If you don't even get to the previous highs, it's hard.
The previous high was in June of 2018, so a little more than 52 week high.
If you think LVMH is coming back, that's the only way they're going to get there.
Right. And Dow Component Walgreens out with quarterly earnings. Profit came in at $1.43 a share, 2 cents above estimates. Revenue slightly above forecasts.
It's a big week ahead for investors. In fact, it's the busiest week of earnings season. Plus, there's a Fed meeting and a jobs report, so a lot to try and digest. Steve Leisman joins us right now with a look at what we should expect from Fed Chairman Jay Powell and company. And Steve, I'd say that's probably the most important thing from the market's perspective this week.
For sure. Not that we could take that mid-fall vacation that you were thinking about, Becky.
Wasn't.
At least not while I was. This is the week the Fed will meet to decide interest rates and probably wishes it was meeting next week. Key economic data will be reported either on the second day of the meeting or after the decision comes out on Wednesday. Let's take a look. ADP and GDP, they come out on Wednesday, and they both look to be soft. Just 80,000 predicted for ADP. Payrolls, 1.6 for Q3 GDP. There's the preferred inflation indicator for the Fed coming on Thursday. And then jobs, just 85,000, maybe a little bit higher, depends on what happens with the census. And the ISM manufacturing, which sparked all the concerns about recession, seen strengthening, but still remaining below 50, which suggests contraction in the manufacturing world. The Fed will have some indication of this data ahead of time. What it won't have, though, is any indication of how the most important issue of all, the trade war between China and the U.S., plays out in mid-November when Presidents Trump and Xi are likely to meet in Chile. Put it all in the hopper. Global economic weakness, softening U.S. indicators, and uncertainty over trade, and the odds favor a Fed cut later this week. 91% probability in October, but just 19% for another follow-up cut in December. So this idea of a Fed pause after this third rate cut has now become the market's central forecast, and the Fed probably going to endorse that by signaling future moves happen meeting by meeting. But it sure wouldn't mind having more data in hand at this meeting before making that call, guys.
Okay, Steve, thanks for joining us now. Krishna Mamani, Invesco Vice Chairman of Investments, and Lindsay Piegza, Chief Economist at Stifel. Krishna, you've been bullish. You've been long. It's been working.
Yes.
In the S&P, and again this morning we're almost at a new high.
Thank you. I think the outlook for the markets in 2019 probably 3,100, but I think outlook for 2020 is meaningfully better because the global economy probably reaccelerates, and the reason for that is going to be the easing of financial conditions that has taken place on a global basis. While the Fed would like to have the data, I think even for the December meeting, I think they probably cut in December as well because the reacceleration probably doesn't come out in 2019. It's really more 2020.
Has anyone noticed that if you were to look at year-over-year earnings per share growth, we are coming out of really a flat year, and the market was exactly flat for the entire year. I mean, I think it might be it might be related. I mean, if you could figure that stuff out, you might actually be able to decide.
Is working like relative to earnings?
Yes, it really does work. It really does
work. A whole lot has happened.
I know, but when it all comes to, and then you're saying we accelerate next year, and earnings per share growth is expected to at least be mid to high single digits.
Exactly. So I think 2019 was the result of the Fed tightening that took place in 2018.
Well, we also had big gains. We were consolidating some huge gains the previous year from what people, either you liked the Tax Reform Act or it was a sugar high. Either way, it did result in some big earnings gains.
Oh, absolutely. And I think the future earnings growth is not going to come off of tax cuts, of course, because there's not much room to do that anymore. However, I think any acceleration in global growth can get you to that mid-single digit level rather easily. I think what to focus on this earnings season is the third quarter earnings, and that probably ends up being the bottom of the cycle, or at least bottom of the near-term cycle. The guidance is okay, not spectacular, but I think acceleration is coming.
Hey, Lindsay, let's get back to Leisman and the report. You were probably frantically taking notes with everything Steve was saying. Did you? Is that sort of are you in the same camp? Did you hear anything new there that surprised you, or we look for one more cut and then a pause?
No, I do think the Fed will continue to ease as we see this further loss of momentum in the data. As Steve pointed out, it's very likely that we continue to see a further slowdown in hiring. Manufacturing remain in contractionary territory. Business investment has been very weak, and we've seen early indications that the consumer is now tightening their purse strings. So taken together, this not only justifies an October rate cut, but I think the Fed is going to be increasingly concerned about even being able to maintain this lower level of more moderate momentum going into the end of the year, and concerned about when we turn the corner into 2020, if in fact we do see that loss of momentum continue, the risk of the R word, recession, begins to become a real concern. And in fact, we saw that in the meeting minutes from last month. A number of Fed officials increasingly concerned about being able to maintain this positive expansion, and in fact, a number pointing out the rising risk of recession. So I think the Fed absolutely cuts in October, cuts again in December, and if we're not able to stabilize, further cuts are very much warranted in 2020.
I think the Fed looks at this more like one of those meals where you wait a little while for the meal to come and you fill up on bread, and then you go ahead and eat your dinner, and then you feel a little bit sick afterwards. And I think that's overstating the case here. But the idea is, I think the Fed believes it has a lot of stimulus in train. And I don't think it's averse to cutting more. What I do think is it wants to see what it hath wrought before it goes ahead and either commits. And I think December is a possibility of a pause until we figure out how much weaker it goes. Lindsay, I don't know.
But isn't this all about language? It's all language.
It's all language. Language equates to billions and trillions of dollars worth of movement of instruments all over the world.
Well, I think it is about language, but I think they already have a whole bunch of things in motion. So the non-quantitative easing, quantitative easing that is taking place in the marketplace is actually quite significant. If they are going to add $80 billion or $60 billion a month to their balance sheet, I think that is significant. The Fed is playing it really smart. They are not boxing themselves in the way they did in fourth quarter of last year by talking all nonsense that we will continue to tighten. I think having done all the things that they have done, the smart thing for them to do is to continue to watch.
That's sort of the Fed's attitude, is that the reversal from the expected tightening was a piece of the easing. The change in the balance sheet, another piece of the easing. The cut in interest rates, another piece of the easing. So it feels like there's three different trains of stimulus that have been set on their journey, and it takes time, they think, for it to. And I think that what's interesting is it sees the market, at least for the moment, comfortable with that. And if it can take a pause, I think it's gonna take it.
I think that is true. However, I think given what they did in 2018 and the significant slowdown that it wrought on the global economy, it would be prudent for them. I think they're going to do it.
Can we get one more comment from Lindsay, who we should have?
I know.
It was my bad.
Lindsay?
Well, I think at this point, the Fed has recognized that policy went well beyond neutral as they tightened very aggressively in 2018. So July, September, those rate cuts just get us back closer to neutral. We're not yet in accommodative territory. So the Fed still is very concerned that they need to get ahead of this weakness. They don't want to continue to chase the economy down, particularly given that we're starting from such extremely low levels of rates. They don't have the ammunition in their tool belt to slow play this. They need to be aggressive. They need to get out ahead of the weakness. And that's why I don't think they're going to have the opportunity to pause in December. They need to continue to lower rates until we see the data stabilize.
We're going to have to end it there. I'm trying to figure out who to listen. Everybody on the Fed, there's such a disparity of opinion. I need one person who talks for everyone.
Well, don't listen to the Fed.
I don't know if it's Powell. Is it Powell? And I don't know what he's there. Is it Clarida? Who is it?
Don't listen to the Fed. Pay attention to the credit markets. If there is an impending recession, you will see significant widening there, and there's no sign of that.
All right. Okay. Lindsay, thanks. Krista, thank you.
We got a lot more coming up on Squawk Box this morning. Could this be the next investing frontier? Sir Richard Branson thinks so. We're going to talk space and how many are looking to profit from the race to out of this world. Stay tuned. You're watching Squawk Box on CNBC.
Today's big number, $24.6 billion. That's how much money has been invested into private space companies since 2009, according to a report by Space Angels.
I've got to tell you about our beautiful city break in Bath. Midweek is the perfect time to beat the crowds. Just an hour and a half by train from London. It was so relaxing. We headed straight for Bath Christmas Market. Oh, I can still smell the roasted chestnuts and mulled wine from the chalets. Next, we donned our skates for Bath on Ice. I'm a natural. Didn't have to hold on to anything or anyone. There's so much to do in Bath. I'm already planning my next trip.
Discover the magic of Bath this Christmas. Plan ahead at visitbath.co.uk/Christmas.
Whatever job you're searching for, you can find it on LinkedIn. First jobs, flexible jobs, work from home on a Friday jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, Soho jobs, Shoreditch jobs. Keep me away from the central line jobs. Banking jobs, building jobs, never ever boring jobs. Small jobs, big jobs, lunch in Borough Market jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
Why is Lizzie going rental for Fizzy Haze?
Is it because her flat is so beautiful and spacious? Snazzy! Or has roof terrace, garden and party room? Surprising! Or because it's 18 minutes to Paddington? Easy! With friendly staff on hand to take any deliveries. Amazing! Or just because her fuzzy friend can live there too? Find your new home at fizzyhaze.com. Fizzy Living, reinventing renting.
They don't chant your name when you give blood, or sing songs about you. But patients and their families will remember you forever. Because your blood can change their lives. We need more blood donors in Tooting, the West End and Edgware. Bleed for London. Join us today at blood.co.uk.
So it's not fair, self-service checkouts. Let's forget the fact you're now working on a supermarket checkout. As soon as you put anything past the scanner and placed it down on that bagging area, you literally just nudge. Literally, a blueberry falls out the bag. And it's going, thanks to get assistance. You need assistance. And they got to wait there for hours because everyone else is moving things. It's just not fair.
If you want fair, you want fibre broadband from TalkTalk. Search TalkTalk Fibre. Fairer broadband for everyone.
There's something for everybody this Halloween at Aldi. Dead good sweets, decorations, face paints. Be afraid. Be very afraid to miss out on these shockingly low prices. In store now. Everybody get to Aldi for an amazing Halloween.
Halloween's back, all right.
Welcome back, everybody. A big step for investors interested in the space race. Morgan Brennan joins us right now. She's got more on that front. Morgan, good morning.
Yes, it is a big day today. It is a milestone. Virgin Galactic begins directly trading later this morning at the New York Stock Exchange. Market cap $2.3 billion as of the merger close on Friday night. Ticker symbol SPCE. This will represent a number of firsts. First and only publicly traded space tourism company, and first among this class of so-called new space commercial companies to test public investor appetite. What is Virgin Galactic? Sir Richard Branson's venture to send paying customers to the edge of space. It's comprised not only of the flights and future service, which is forecast to begin sometime next year, but also the spaceship company, which is the subsidiary that manufactures the carrier aircraft and the space planes that are launched from them. Ticket price. $250,000 to go to the edge of space. More than 600 people have so far signed up. $80 million in collected deposits, over $120 million in potential revenue off of that. Under Armour designing the custom spacesuits. Flights will take place from Spaceport America in New Mexico, which the company is in the process of moving into. It's going to be their HQ. It is not a traditional IPO. This is combined with Social Capital head of Sophia, a special purpose acquisition company, a SPAC, that is already on the NYSE and trading there. But this will be watched very closely, not only by the space industry, but by Wall Street and also Silicon Valley. And guys, at 10 a.m. Eastern, first on CNBC, we will have Sir Richard Branson, the CEO of Virgin Galactic, George Whitesides, and Chamath Palihapitiya from Social Capital joining us to talk about all of this as the company starts trading.
Morgan, I don't know if you saw the video that was playing while you were talking, but they had people in spacesuits kind of floating around in some blue sort of tank. What is that?
So that was 2 weeks ago when Virgin Galactic, alongside Under Armour, unveiled their new custom spacesuits that people that sign on and pay for their $250,000 tickets get provided with to go up on the suborbital flight.
That looks pretty cool. I have no interest in going to space, but that looks pretty cool. Let's talk a lot more about this. Joining us with a closer look at investing in space is Mark Bell. He is the founder, president, and CEO of Mark Bell Capital. It's been listed as a top 10 VC investor in space technology. And Mark, thanks for being here.
Thank you for having me.
So you first got hooked when you were 10 years old. You saw Star Trek for the first time?
Yeah, I became a Trekkie and only dreamed of space ever since.
And where are we now? How far have we come in that time?
I mean, we have seen it explode. I mean, space has become economical. It's become affordable. I mean, things that you couldn't do 20 years ago are now doable. I mean, look at what's happening today. I mean, Virgin Galactic is the first company that's going to go out there and put the average citizen into space.
Are you going to sign up?
Already on the waiting list.
You've already put down your deposit?
I'm waiting to hear back.
Let's talk about what your biggest investment is.
Our biggest investment is in a company called Terran Orbital. I mean, we manufacture satellites for the government, many governments, and it is just an incredible opportunity. Things you couldn't do before, like synthetic aperture radar, which is one of our key things, or space situational awareness, kind of things mapping out space, or imagine looking through the clouds and never losing a ship, never losing a plane, imaging 24/7, imaging at night. That's the future. And that's what SAR gives us.
In terms of sort of ranking how you look at this whole world, who's doing well and who's behind, I don't know if you saw these comments from Gwynne Shotwell on Friday. She was at the Ron Barron conference, and she was taking shot after shot after shot at Blue Origin. This is Jeff Bezos' operation, saying that they are 3 years ahead, that these guys are so far behind. I mean, she was just sort of, it was like a drive-by shooting at everybody. Are they that much, is SpaceX that far ahead relative to everybody else?
I mean, SpaceX has done phenomenal. Elon Musk has, created, given everyone hope that it can be commercialized, that you can go out and launch, many satellites at once. And it's giving everyone like us an opportunity to launch lots of satellites and launch them on a regular basis.
But are they that much more ahead than everybody else? Is there anybody that's even in league? I mean, if you listen to what she was saying, you would think that, there was no competition in this space.
The big defense contractors, the Boeings, the Lockheeds, like ULA, for example, has limited launches. But SpaceX is just doing it over and over again. It's amazing.
So the answer is yes?
Yes.
Okay.
I'm curious, though, because you mentioned you're invested in a satellite company. That's a big part of the space market as it currently exists. And then you can talk about, launch services, SpaceX, ULA, some of the others that are developing rockets right now. But in terms of space tourism, it seems like it's a little more niche in terms of the size of the market. How are you thinking about it? And would you invest in a company like Virgin Galactic?
We believe space tourism is opening people's eyes. It's bringing it to the average consumer. I mean, maybe a high-end consumer, but now people can dream, people who dreamt of going to space now can actually do it. And that gives people hope, and it is just like the original moonshot. Everybody watched people land on the moon, and that first steps Neil Armstrong took, gave people hope. And that's what Virgin Galactic's doing. That's showing that it's doable.
But at $250,000, it's not doable for most people who will be able to do this. You think the price point will come down over time, or is this always going to be a really ritzy kind of show it off to the few people who have that much money to put forward?
Price point has to come down over time. It's like anything else. The first cell phone costs how much money versus what it costs today. It is just the more people will get into it, like Blue Origin and other companies, other startups will happen, and it will become like airfare. Prices come cheaper and cheaper.
Back to Morgan's point, would you invest in a company like that right now?
But we always look at things. We're all about companies that want to make money today. I mean, we're looking at companies that will be profitable, and we believe, manufacturing satellites for low Earth orbit is a business that's profitable today. Constellations could sell their data today, and the cost of a satellite, like the satellite I brought with me here today, this is $1 million to build, but it could generate, satellites this size can generate revenues that more than exceed its cost.
So no on space tourism right now?
Not yet, but it's coming.
Okay. Mark, thank you very much for joining us. It's a pleasure. And Morgan, it's good to see you.
Good to see you, too.
Thank you.
All right, coming up, California's governor declaring a statewide emergency as wildfires continue and residents are evacuated. That story when Squawk Box comes right back.
Get the best of Squawk Box every day in our new podcast. Subscribe to Squawk Pod on Apple Podcasts, Spotify, Stitcher, or wherever you get your podcasts.
The problem with traditional cotton sheets.
You're in charge of hiring, and Indeed has solutions, like online skills tests, which let a candidate show that they are the right hire. And we give you this toy monkey, who will bang its cymbals when the right CV appears on your desktop. Okay, there is no monkey. There is no monkey. But there are online skills tests.
See why more than 250,000 companies in the UK use Indeed for hiring. Visit Indeed.com/try today to try skills tests for free today. Terms and conditions apply.
There's something for everybody this Halloween at Aldi. Dead good sweets, decorations, face paints. Be afraid. Be very afraid to miss out on these shockingly low prices. In store now. Everybody get to Aldi for an amazing Halloween.
Halloween's back, all right.
It's hard to find a children's gift which doesn't have a short shelf life. They'll eat all the chocolates in 5 minutes, finish their video games by the end of the week, and grow out of their trainers before you know it. So instead of buying them something just for Christmas, buy them something that's for life. Premium bonds from NS&I. Every month they'll have the chance to win cash prizes. And now you can buy premium bonds for any child. Start their savings journey from just £25. Search Gift Premium Bonds to find out more.
I've always loved a kitchen experiment, especially smoothies. I've blended all sorts of mad combinations. Strawberry and charcoal, broccoli and chocolate. Not my best, that. But when I test blenders in the Witch Lab, it's not about flavour, it's about performance. Our tests use proper tough stuff, hard ice, strong veg, rough nuts. And the blenders that can hack it are the only ones we recommend for your kitchen.
Which tests harder so you can buy smarter. Visit which.co.uk.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Carl's All Change Casserole.
So, Chloe walks in from school. Tears all over her face.
Daddy,
She says,
I don't want to eat animals anymore.
I blooming love my meat. But not as much as I love my little girl. That's why we've made some changes to our old favourite, sausage casserole. Now with meat-free Cumberlands, but still with my magic touch. A dollop of mango chutney. Just as tasty as it used to be.
Better, actually.
Make your own with the new Tesco Plant Chef range. Food Love Stories. Brought to you by Tesco.
Welcome back to Squawk. We are watching fires continue to tear across Northern California. The Kincaid fire has now burned more than 84 square miles, and as of last night was only 5% contained. More than 200,000 people were forced from their homes. PG&E saying power is out for nearly 2.7 million people. California Governor Gavin Newsom declared a state of emergency as several new fires broke out just yesterday afternoon, and officials are worried that fires could jump across the 101 freeway and rapidly move west into an area that hasn't seen fire since the 1940s. The vegetation there is dense, old, and dry. We're going to have a live report from the ground there in just the next hour.
Still to come on Squawk Box, we have this morning's biggest stock movers, and then later, it's your money, your vote. One of the architects of Elizabeth Warren's wealth tax proposal squares off against a supporter of President Trump's economic plans. Gabriel Zuckman versus Andy Puzder. Squawk Box will be right back.
When you hear the call of the wild, answer with a pair of Skechers.
You're in charge of hiring, and Indeed has solutions, like online skills tests, which let a candidate show that they are the right hire. And we give you this toy monkey, who will bang its cymbals when the right CV appears on your desktop. Okay, there is no monkey. There is no monkey. But there are online skills tests.
See why more than 250,000 companies in the UK use Indeed for hiring. Visit Indeed.com/try today to try skills tests for free today. Terms and conditions apply.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Hello? This is Dustin. I found something. Is anybody there?
We hear you, Dustin. With Sky Q, you can easily catch up on epic Netflix shows like Stranger Things and then watch award-winning Sky originals like Chernobyl. Get Sky and Netflix all in one place on Sky Q for one surprisingly low price, just £25 a month. Visit sky.com and join today. Offer ends November 14th. 18-month minimum terms. Prices may change during contract. Requires Sky Q box connected to broadband. Set up from £20. Further terms apply.
With the new Halifax Family Boost mortgage, children can get help to buy their first home, and mum and dad earn interest on their savings. Everyone's a winner. The new Halifax Family Boost mortgage. Halifax makes it happen.
Your home and savings could be at risk if mortgage repayments are not maintained. Only available in England and Wales. One applicant must hold a Halifax Reward or Ultimate Reward current account. Conditions and exclusions apply.
Carl's All Change Casserole.
So, Chloe walks in from school. Tears all over her face.
Daddy,
She says,
I don't want to eat animals anymore.
I blooming love my meat. But not as much as I love my little girl. That's why we've made some changes to our old favourite, sausage casserole. Now with meat-free Cumberlands, but still with my magic touch. A dollop of mango chutney. just as tasty as it used to be.
Better, actually.
Make your own with the new Tesco Plant Chef range, Food Love Stories, brought to you by Tesco.
Will cancer affect my sex life?
Your sex drive can disappear. The side effects may stop you.
Sex life can easily stay.
When you search one question about cancer, you end up with millions of results which contradict each other. For clear and uncomplicated information, come to Cancer Research UK. Visit us online or give us a call on 0808 800 40 40. Cancer Research UK. Together, we will beat cancer.
Good morning, everybody. Among the stories that are front and center this hour, Spotify posting an unexpected profit for the latest quarter. The music streaming service also reporting revenue that came in above analysts' expectations and forecasts. Now monthly active users up 30%, and premium subscribers were up 31% from a year ago. That stock up a little over 5.5% right now. Take a look at gasoline prices. They have now fallen by 4 cents per gallon over the past 2 weeks. That's according to the latest Bloomberg survey. It puts the average price now at $2.68 per gallon. And then Warner Brothers' Joker. I have not seen this movie yet, but it reclaimed the #1 spot at the weekend box office. It brought in another $18.9 million in American ticket sales. Joker had been pushed out of the top spot last week by Disney's Maleficent, Mistress of Evil. And take a look at U.S. equity futures at this hour. You're looking at Dow. The Dow looks like it would open up about 95 points higher. NASDAQ up about 30 points. S&P 500 up close to 8 points.
If we open at these levels, the S&P 500 will be sitting at a new record intraday high. We'll keep an eye on that and see as we get closer to the opening bell. When we return, AT&T posting quarterly results this morning as the company deals with activist investor Elliott Management. It's got some answers for that, too. We'll talk the numbers with veteran telecom analyst Craig Moffett next. Plus, don't forget to subscribe to our new podcast. You'll get interviews and much more. Stay tuned. You are watching Squawk Box on CNBC.
Mini. Whatever job you're searching for, you can find it on LinkedIn. First jobs, flexible jobs, work from home on a Friday jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, Soho jobs, Shoreditch jobs. Keep me away from the central line jobs. Banking jobs, building jobs, never ever boring jobs. Small jobs, big jobs, lunch in Borough Market jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
We've been together 3 years. We both love travel, and luckily we've got the same taste in music. Next year, we're planning a big road trip, and my wife's coming too. It'll be nice. The three of us don't do enough together. We know how much your Mini means to you. That's why Mini Service offers an array of convenient options and allows you to book online anytime at mini.co.uk. Because we love your Mini almost as much as you do. Search Mini Service. Who's in? T's and C's apply, subject to availability, participating retailers only.
London, switch to Vodafone, the UK's best mobile network, and V Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Can I have chemo at home?
It's only suitable for a couple of types of
cancer.
When you search one question about cancer, you end up with millions of results which contradict each other. For clear and uncomplicated information, come to Cancer Research UK. Visit us online or give us a call on 0808 800 40 40. Cancer Research UK. Together, we will beat cancer.
Hurry to TradePoint. The 3 for 2 on all paint offer ends this Sunday. Plus, if you have loyalty discount, you'll get this on top. From Dulux Trade to Leyland Trade. Don't miss 3 for 2 on all paint at TradePoint. Every third item per single transaction in descending price order free. See tradepoint.co.uk.
Hello? This is Dustin. I found something. Is anybody there?
We hear you, Dustin. With Sky Q, you can easily catch up on epic Netflix shows like Stranger Things and then watch award-winning Sky originals like Chernobyl. Get Sky and Netflix all in one place on Sky Q for one surprisingly low price. Just £25 a month. Visit sky.com and join today. Offer ends November 14th. 18-month minimum terms. Prices may change during contract. Requires Sky Q box connected to broadband. Set up from £20. Further terms apply.
Welcome back to Squawk Box, everybody. This is the busiest week of earnings season. Dom, too, joins us. He's got a look at what's still to come this week. What do you see, Dom?
All right, so exciting, Becky, because there are so many different corporate, microeconomic, company-specific catalysts to talk about this week. Like you mentioned, the busiest week of earnings season, we have 150 companies in the S&P 500 or thereabouts reporting their numbers, give or take, and then 6 of them are actually Dow components. So as you can see behind me here, there's going to be no shortage of stories to tell. Today, AT&T already out earlier this morning, Alphabet, Spotify, T-Mobile, GM, Amgen, Pfizer, Dow component among those on Tuesday. Apple and Facebook headline a big slate on Wednesday. We can throw a Starbucks in there after the closing bell. On Thursday, Pinterest, just because of that IPO hype and what exactly they can do with their earnings results. So that's going to be a big one there. Altria, Bristol Myers Squibb, and then energy heavy on Friday, as it typically is for this particular day. Chevron and Exxon typically report together on Friday. If you take a look at all of these, it's because we are now getting through that large part of earnings season. If you take a look at things so far, as they stand, according to data from Refinitiv, with about nearly 200 companies in the S&P 500 reporting, if every single company reports as expected for the remainder of the earnings season, earnings growth will be down about 2%. Revenue growth up about 3.5%. So that's how things stand as we head towards the busiest week of earnings. And by the way, Andrew, that 2% decline in earnings, if you strip out the energy sector, hypothetically, right now it's poised for a 39% drop in earnings growth. If you strip that out, earnings season could actually be up 0.5% this time around. So worth watching on Friday when Chevron and Exxon report their results. Andrew, back over to you.
Hey, Dom, thank you for that. I want to talk about AT&T for a moment, posting a mixed quarter earlier this morning. Earnings beating by a penny, but revenue a bit shy. The company had pushed back its report because of negotiations with Elliott Management. And you're going to look at that stock up, though, this morning because of a little bit of what they said in terms of forecasting and because of the support they're now getting from Elliott. Elliott disclosing a stake in the company, of course, back in September. Joining us right now to talk about the earnings report. And specifically, I want to get to this fight with Elliott, which seems to have reached a détente, at least for now. Craig Moffett is here. He's the founder and senior analyst at MoffettNathanson. He has a neutral rating and a $31 price target on AT&T. Looks like the battle, Craig, at least temporarily, has been halted. This idea they're going to have some new board members and no more acquisitions, at least for now. And we'll see what happens to Randall Stephenson. Doesn't sound like he's going anywhere, at least not in 2020, Craig.
That's right, Andrew. And they also committed to share repurchases.
Right. Which is a big one.
Which is a big one.
That and the dividend as well.
Yeah, that and the dividend. And look, the challenge for investors now looking at today's report is going to be how believable is this guidance? Because they're saying they're going to grow revenues 1% to 2% a year. They're going to expand margins by 200 basis points by 2022. And yet, against that, revenues are currently shrinking at the consolidated level. They're about flat in wireless. They're shrinking, and margins are shrinking in the entertainment group. They're flat and shrinking in, margins are shrinking and revenues are shrinking in the business services group. Warner Media is down 4.4%. So every part of this business is shrinking and getting worse, and yet the guidance says, don't worry, it's about to get better.
And so you're not believing it, is what you're basically trying to say in a polite way?
I think it's hard to see exactly how they get there. Look, telecom companies are at the end of the day high fixed cost industries, right? They have largely fixed costs, and so if revenues go down, the only way to keep margins from also going down is to radically cut costs. Now, AT&T is a reasonably good cost cutter, and a lot of what Elliott has said is that you have to get better at being a cost cutter, and that's a lot of what's in this operating plan, presumably. The margin expansion comes mostly from cost cuts. But it's really, take the entertainment group, which is their second largest part of the business behind wireless. The entertainment group is now, the subscriber base of premium video, mostly DirecTV, is now shrinking at more than 10% a year. And in the quarter, it's down 5.3% just in the last 3 months. So it annualizes to something like a 20% decline. It's really stretches credibility to say that, don't worry, next year we're still going to be with 20% fewer subscribers. We're going to be fine and we'll be able to keep flat EBITDA. The business services group, which is a huge group, almost as large as the whole Warner Media complex, is seeing EBITDA right now shrinking at more than 7% a year. And that is a secularly challenged business. It's not that AT&T is not running it well. It's that there are serious headwinds to business services as that industry gets commoditized. And so you're seeing price compression for all the incumbents. You're going to fight against a lot of secular trends in order to hit these kinds of numbers. And I think what the market's going to be grappling with is, how feasible is that?
Hey, Craig, your price target is $31. Is that correct?
That's right.
The stock is now 20% plus past that. Are you reconsidering that? Or is there a point where you say, okay, forget it, throw in the towel?
Well, so what we said in our last report is that it was called Tina Loves Telecom, meaning there is no alternative right now in a world of global yield starvation. And so AT&T stock will continue to attract capital simply because the dividend is so high until it becomes clear that the dividend needs to be cut. And the guidance is very positive, but I don't think it's going to put to rest. And look, and let me be clear, they've also done a very good job in asset monetizations and what have you in paying down some debt. But the secular challenges for all of these businesses are bad and getting worse. And so eventually the debate about how sustainable is the dividend will come back until they can show that there is some way that they can actually sustainably find a way not just to grow the overall business, but to grow any of these businesses individually.
So, Craig, the piece of this that I'm curious about is, are you surprised then that you're hearing support from Elliott, which came out very aggressively against the company, but now seems to support it? Or do you think that this is just a wait-and-see situation?
Well, what Elliott said in their original letter, Andrew, was this was not a breakup story. In fact, one of the curious things about AT&T, at least by our numbers, was that the sum of the parts actually yielded a lower share price than where the stock was trading. Again, that was sort of emblematic of the fact that the dividend was supporting the stock in a way that sort of fundamentals wouldn't have. So this wasn't about just break up the company and sell off some pieces because as a sum of the parts story would often be in an activist letter. What Elliott asked AT&T to do was mostly around cost reduction and governance and capital allocation. AT&T has committed to doing exactly those things. So while I guess it remains to be seen how efficacious those things turn out to be in the face of, you can't cut your way to greatness, as they say, whether they can cut enough costs that it actually makes these businesses turn around is, to me, a difficult proposition. But they are essentially executing on what Elliott asked them to do. So, no, I don't think it's terribly surprising that Elliott is supportive of the trajectory.
Okay. Craig, we appreciate you waking up early on the West Coast this morning for us.
My pleasure.
Thank you. Great to see you.
All right, coming up, the great tax debate. Democratic presidential hopeful Elizabeth Warren is grabbing Wall Street's attention with her plans to make the wealthy pay more. One of the architects of her plan, Gabriel Zucman, he will join us on set again and debate former CKE restaurant CEO and GOP supporter Andy Puzder. That's coming up next.
Why is Old Dominion #1?
London. Switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Sorry, Stevie's a bit poorly, so we won't be coming to nursery today.
Okay, thanks for letting us know.
So I brought Max instead. I packed his favourite toy. He normally naps twice a day and loves playing outside.
Like getting your money's worth? Enjoy the delicious cheeseburger. Just 99p from the McDonald's Saver menu. From 10:30 a.m, except in selected restaurants from 11 a.m. Price and participation may vary.
Hello? This is Dustin. I found something. Is anybody there?
We hear you, Dustin.
With Sky Q, you can easily catch up on epic Netflix shows like Stranger Things and then watch award-winning Sky originals like Chernobyl. Get Sky and Netflix all in one place on Sky Q for one surprisingly low price, just £25 a month. Visit sky.com and join today. Offer ends November 14th. 18-month minimum terms. Prices may change during contract. Requires Sky Q box connected to broadband. Set up from £20. Further terms apply.
Your new neighbour is a musician. His creative peak is at 3 a.m. They're doing roadworks next to your house. Your dog thinks he's a wolf at night. There's always a reason to travel. Fly with Lufthansa's incredible fares around the world. For example, to Bangkok, Shanghai, or Singapore. Book now on Lufthansa.com. Conditions apply.
Say yes to the world. Lufthansa.
Can I have chemo at home?
It's only suitable for a couple of types of
cancer.
When you search one question about cancer, you end up with millions of results which contradict each other. For clear and uncomplicated information, come to Cancer Research UK. Visit us online or give us a call on 0808 800 40 40. Cancer Research UK. Together, we will beat cancer.
All right, welcome back, everybody. Now let's get to politics and your money. Senator Elizabeth Warren's rise in the poll grabbing the attention of many on Wall Street. Here's investor Ron Barron on Squawk Box on Friday.
I don't think that Elizabeth Warren would be successful in getting, it doesn't matter how many people are going to be elected or Democrats, she's not going to be successful if she were chosen president as getting through the policies that she's proposing. I think they're pretty nuts.
Joining us right now is Gabriel Zuckman. He helped design some of those policies, including Senator Warren's tax plan, and is the co-author of the book Triumph of Injustice, How the Rich Dodge Taxes and How to Make Them Pay. Also with us this morning is Andy Puzder. He's former CKE restaurant CEO. And gentlemen, it's good to see both of you.
Good to be here.
Thank you for joining us today. Gabriel, that was Ron Barron on Friday. He doesn't think that these proposals would ever make it through. What is your answer to that? What's the feedback that you've gotten since the book came out?
Yeah, well, people said the same thing of the federal income tax before 1913, that it would never work, it would never be a reality, that people would evade it, that it would be bad for the economy and for jobs and so on. And, now we know that it's a big success, it's working very well. So the wealth tax could work well. Wealth concentration has increased a lot in the U.S. The top 0.1% wealthiest Americans own about 20% of U.S. wealth. So there's a ton of wealth at the top, and their tax rate currently is not high. The 400 wealthiest Americans pay only 23% of their income in taxes, and so the most direct way to make them pay more is through a wealth tax.
Take it away.
Can I ask this question? Because you've been advising Elizabeth Warren on these issues to some degree. Does she want to take money away from the wealthiest because she wants to redistribute, or does she want to take wealth away from the wealthiest because she sees this as a larger inequality story? What's the if you were to get inside her brain?
I can't talk for her. I'm not involved in any campaign, in any official position. And, there's a trade-off. If you have a high tax rate, then you reduce inequality a lot, and you don't collect a lot of revenue in the long run. If you have a more moderate wealth tax, you do less to reduce wealth concentration, but you can sustainably collect quite a lot of money that can be spent on childcare, on healthcare, on student debt.
But how much of this for her is about raising revenue versus this sort of some people would describe it as a social engineering project as well?
She's more in terms of the rates that she proposes. They are quite what I would call moderate wealth tax rates. 2% above 50 million, 3% above 1 billion.
Andy, your thoughts on the wealth tax?
Well, first of all, with the income tax, I think it's a good comparison. When the income tax started, the idea was that only the wealthy would be taxed. About 10% of taxpayers were taxed. By 1940, it was everybody was filing a tax return. And that's the same thing with this wealth tax. It's only supposed to be on the wealthy now, but you got to be some kind of naive to think that we all won't be subject to a wealth tax over time if this thing takes place. So I think it's a terrible idea, number one. Number two, I think it will discourage economic growth. I'm more of a John Kennedy, the economic tide lifts all boats. We want to generate economic growth. So I think things that encourage investment, that encourage people to invest, are the way to really lift people from the bottom to the top. And as far as taxes, we've got the top 10% of wage earners pay 70% of taxes. The top 50% pay 97% of taxes. I mean, we have a very progressive tax system. We're seeing people from the bottom being lifted up. You look at wage growth over the past 14 months for production and non-supervisory employees, in other words, workers, have been up over 3% for 14 consecutive months with the economic growth under President Trump. They were up 3.5% last month. So we've got real growth. It's harder to find a blue-collar worker than a white-collar worker. The current population survey showed that economic inequality decreased statistically significantly last year when you take into account the size of households. So we're seeing the kind of things you'd like to see, the poor are getting richer and the rich are getting richer. I don't think that wealth is a zero-sum game where the rich only get richer if the poor get poorer and vice versa. So I think we're on a good track now. I hope we can continue this track and continue to grow the economy.
Gabriel, with the wealth tax, you take 2% away every year. Cumulatively, that adds up over several years, and you're talking about a pretty big number. Why, if you're concerned about the wealthy, why don't you just focus on capital gains? Because that's the reason a lot of the wealthiest pay much less money, because they are collecting more from their stock investments or other investments than they are from ordinary income, and that's taxed at a lower rate.
Yeah, well, I think you should do both. Have a more progressive income tax and higher capital gains taxation, and a wealth tax. And the reason why the income tax is not enough is because when you're extremely rich, you can own a lot of wealth while realizing and reporting very little taxable income. So you take Warren Buffett, for instance. He's worth $80 billion, but his company, Berkshire Hathaway, doesn't pay dividends, and so he just sells a few shares every year and realizes a bit of capital gains, maybe $10, $20 million. He pays 20, 23% on that, right. And his effective tax rate, like 2-3 million in taxes paid divided by his true economic income, which is something like 6% times his wealth, $5 billion, is essentially 0%.
You're talking about people who are founders. If you look at a Warren Buffett or a Jeff Bezos or someone, those are people who are founders who are trying to keep control of the company. What you would do is effectively force them to sell shares and lose control of the company. You force them to sell shares. They then have to pay taxes on that on top of it.
Gradually, taxes. Yes. You do eventually pay taxes on those gains. You pay capital gains tax at some point, or you pay estate tax when you die. So it's not that money isn't taxed. It is taxed. It's just when is it taxed?
But by the way, I don't disagree with you. But the issue to me,
that's good to hear. Okay, it happens so rarely.
But then the question is, okay. So to me, you can solve a lot of your problems that you're talking about by changing the step-up basis on at the end of life. That's a huge component of it. Yeah. Possibly changing even, and I don't know where you stand on philanthropy, but that's a huge component, because if you're going to give all your money away, to some degree you could argue that myself as a taxpayer is effectively subsidizing those who are giving the money away. I don't know where you land on that. I would like to encourage a lot of philanthropy. Maybe there's a limit. I don't know. You got 1031 exchanges. You got carried interest. You could go. You could do something on capital gains if you wanted to in a progressive way. The question is, why wouldn't you go after what I would call all those things low-hanging fruit relative to a larger wealth tax?
But again, I think you want to do both, and you take the case of Mark Zuckerberg.
Both becomes complicated.
Well, look at Mark Zuckerberg. Your argument is let's wait for him to pay the estate tax. It's going to be in 50 years or 60 years.
Right. Okay.
It's too long. Right now, he's not paying much in taxes, just because Facebook doesn't pay dividends, and the corporate income tax has.
But I have no idea what's going to happen to Facebook. But what happens if I told you that? What happens if I told you that in 20 or 30 years from now, Facebook? I hope it's not worthless, but let's say it turns into. He would be very upset for me saying this. MySpace. It turns into Kodak, MySpace, or something of that sort. So you're saying he should pay taxes on what it's worth today. Even if later he's left with nothing, and
he should pay taxes today because he is extremely wealthy, doesn't pay much tax, and this is money that can fund.
But he can't spend it otherwise. This is being cash poor. This is not like he may have created wealth, but he can't use the wealth.
Of course he can. He can borrow money if he wants. He can give to charities. I mean, there are lots of ways when you're worth $50 billion to spend whatever you want. So if he wants to spend,
I'm not suggesting he's cash poor either.
He's not cash poor. Yeah.
So look, Becky was right. If you have a 2% tax for 25 years on somebody's wealth, that's 40% of their wealth that goes away. Who's going to stay in the country if you can do that? This is why 12 countries in Europe had a wealth tax in 1990 and 3 have it today. It doesn't work. People leave. It's hard to enforce. It's hard to calculate the wealth. What you would do is you would encourage people to buy assets that didn't have a market. In other words, you can value stocks, so you can say what they're worth. If you're rich, what you're going to invest in is things where you can argue with the government about what your money's worth, or you're going to leave the country. This has terrible economic ripples. You'll destroy economic growth. You'll take the most successful nation in the history of the world, and you'll make it France or Venezuela. We don't want to do that.
Or you'll just make it like the U.S. from the 1950s and 1980s. From the 50s to
there was
80s,
no wealth tax in the 50s and 80s.
You had a 50% corporate tax.
But nobody paid it.
50%
the rich people didn't pay it.
Corporations did pay it.
They didn't pay it. They had incredible exemptions.
No, for the corporate tax. I'm not talking about the individual.
So you want to take those corporate inversions, so we're driving companies back to Ireland again.
50% corporate tax.
This just doesn't make economic sense.
90% top income tax rate, 80% estate tax rate, and growth was 2.2% a year.
Nobody paid the high rate.
Since 1990, growth has been 1.1% a year, with much lower corporate tax rates.
Can I ask you a question about that argument? Because you've made the sort of inequality argument, which is to say that actually if you were to tax people more and there'd be more redistribution of wealth, that you actually think that would create growth, is what I've heard from you in a way.
It can have a small positive effect.
And my question is, when you look at the 1950s, 60s, 70s as these sort of baseline cases that you're running against, and I've said this on the show a lot, during that period, the rest of the world was out of business. So we were a monopoly power in the United States with monopoly rents. You got to 1980 when wages started to stagnate. What happened? The rest of the world all of a sudden came online. They're now competing with us. Germany, Japan, all of them are now back in business. And then you're playing against a global competitive field in a way that didn't exist before.
No, it's a good argument. But what I would say is one of the big lessons from economic history is that what makes countries wealthy is not low tax rates on the rich. It's investment in education, in health, in infrastructure, in the public goods and services that make communities prosperous. And the U.S. to some extent did that from the 50s to the 80s.
Now the issue is we're not spending enough. We're not spending enough now.
Yeah,
so we don't have enough revenue.
Look at the tax to GDP ratio. It has declined by 4 points since the late 1990s. So that's a real revenue problem.
I think we need more revenue because we need to spend more money. The question is, how do you get that? How do you get that revenue?
How do you get the revenue without discouraging the growth that creates the revenue? Which is exactly what would happen if we implemented these plans. You put in a wealth tax, the growth that creates more tax revenue disappears. You become like any other socialist country. You become a no-growth, oppressive state where the government promises everything and provides nothing.
You distribute a smaller pie more fairly.
Yeah, you want to instead of growing the economic pie, you want more equal, smaller pieces. Well, it makes no sense.
Well, by the way, it made sense for the U.S.
Not this country.
What do you make about the debt load? So I have a great fear of the amount of debt that this country has taken on, but there's others in the sort of economic world these days who actually think that debt can be unlimited.
Yeah, I mean, for the wealth tax, it's irrelevant. You borrow, your assets increase.
My question is, do you plan to use the revenue to pay down the debt, or do you want to use the revenue to pay for services?
Well, the mix, I guess.
Okay. I guess it depends upon how much you're going to spend. Look, by the way, between the last year before the tax cuts, 2017 fiscal year, and this fiscal year, tax revenues are up 4.5%. Without these huge taxes. We've had it because we grew the economy. American businessmen and businesswomen invested, they grew, they hired, and we're going in the right direction.
Andy, Gabriel, I want to thank you both for being here.
Thank you very much.
We're taking on a lot of debt to do that. Coming up, but when we return, Housing and Urban Development Secretary Ben Carson is going to join us live. His department has a big announcement this morning, and he's joining us right here on Squawk Box first.
Whatever job you're searching for, you can find it on LinkedIn. First jobs, flexible jobs, work from home on a Friday jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, Soho jobs, Shoreditch jobs. Keep me away from the central line jobs. Banking jobs, building jobs, never ever boring jobs. Small jobs, big jobs, lunch in Borough Market jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
I've
always loved a kitchen experiment, especially smoothies. I've blended all sorts of mad combinations. Strawberry and charcoal, broccoli and chocolate. Not my best, that. But when I test blenders in the Witch Lab, it's not about flavour, it's about performance. Our tests use proper tough stuff, hard ice, strong veg, rough nuts. And the blenders that can hack it are the only ones we recommend for your kitchen.
Which tests harder so you can buy smarter. Visit which.co.uk.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
With the new Halifax Family Boost mortgage, children can get help to buy their first home, and mum and dad earn interest on their savings. Everyone's a winner. The new Halifax Family Boost mortgage. Halifax makes it happen.
Your home and savings could be at risk if mortgage repayments are not maintained. Only available in England and Wales. One applicant must hold a Halifax Reward or Ultimate Reward current account. Conditions and exclusions apply.
Hello? This is Dustin. I found something. Is anybody there?
We hear you, Dustin. With Sky Q, you can easily catch up on epic Netflix shows like Stranger Things and then watch award-winning Sky originals like Chernobyl. Get Sky and Netflix all in one place on Sky Q for one surprisingly low price. Just £25 a month. Visit sky.com and join today. Offer ends November 14th. 18-month minimum terms. Prices may change during contract. Requires Sky Q box connected to broadband. Set up from £20. Further terms apply.
Your new neighbour is a musician. His creative peak is at 3 a.m. They're doing roadworks next to your house. Your dog thinks he's a wolf at night. There's always a reason to travel. Fly with Lufthansa's incredible fares around the world. For example, to Bangkok, Shanghai, or Singapore. Book now on Lufthansa.com. Conditions apply.
Say yes to the world. Lufthansa.
Earnings alert. We'll get you caught up on the numbers from AT&T and Walgreens and the reaction on Wall Street. Plus, we get you ready for reports from 3 FANG names.
New this morning, an announcement from the Trump administration on housing. HUD Secretary Ben Carson joins us live.
Tiffany shares soaring on talks of a potential luxury merger. We're going to tell you what happens next. The third hour of Squawk Box starts right now.
And I said, what about breakfast at Tiffany? She said, I think I...
Live from the most powerful city in the world, New York, this is Squawk Box.
Good morning and welcome back to Squawk Box here on CNBC, live from the NASDAQ market site in Times Square. I'm Joe Kernan, along with Becky Quick and Andrew Ross Sorkin. And the futures are now pushing close to triple-digit gains in the Dow, up over 90. The S&P indicated to open in record territory, all-time record territory, up 7 points. NASDAQ indicated up 27 and change. Treasury yields have been backing up. I saw 180 earlier on the 10-year. We'll see where we are right now. 183 on the 10-year now.
Let's get you caught up on some of the stories that investors are going to be talking about today. AT&T shares are higher in the pre-market trading after quarterly earnings and the release of a detailed 3-year outlook. Per share profit beat estimates by a penny at 94 cents a share. AT&T also projected 1 to 2% revenue growth over the next 3 years, modest dividend increases, no major acquisitions, and no CEO transition through the year 2020. That stock right now up by about 1.2%. Ford and Fiat Chrysler are next at the negotiating table after GM workers ratified a new 4-year labor deal over the weekend. That vote ended a 40-day strike. Analysts say that Ford and Fiat Chrysler may be more reluctant to follow the terms of GM's agreement since they operate with smaller profit margins. And the European Union has agreed to a Brexit delay of up to 3 months. That agreement comes 3 days before what had been an October 31st deadline for Britain to leave the EU. An earlier departure is possible if Parliament ratifies a separation deal.
And a few stocks on the move this morning. To tell you about Tiffany shares, they are surging after French luxury goods maker LVMH said it approached Tiffany about a possible bid. LVMH didn't give details, but we can tell you that the bid is about $14.5 billion, about $120 a share. Oppenheimer analyst Brian Nagel is going to join us later this hour to talk about this potential deal. My understanding, based on sources that I spoke to, is that the expectation is that they will say no to this particular bid in the next week as they examine it. And then the question, of course, is whether LVMH will come back with a higher bid. We should tell you that stock traded as high as about $136 a little over a year ago, so $120 on a relative basis, at least if you're the board, may seem too low. Also jumping this morning, shares of industrial real estate owner Liberty Property Trust. It's agreed to a takeover by rival Prologis. It is an all-stock deal. It's worth $12.6 billion. This is big, and it's expected to close during the first quarter of 2020.
All right, this morning, HUD Secretary Ben Carson announcing an agreement with the Department of Justice regarding the FHA program. Both departments are hoping to bring back the program that some banks and lenders abandoned after the financial crisis. Joining us now with the details, Housing and Urban Development Secretary Ben Carson. Not everyone, I think, it's good to see you, Mr. Secretary, by the way. It's been a while. But not everyone's aware of the problem and aware of the solution. Can you quickly just go into what happened after the financial crisis? Who's now involved with this, and how do we get some of the big players back in?
Well, after the financial crisis, the Department of Justice and HUD began going after many of the banks who had been engaged with many of the loan practices. And they were so vigorous in their pursuit of these individuals. They did get a lot of money, but they basically drove them away because in many cases the banks had only been involved in some very minor non-material defect in the process and were slammed with enormous fines and suspensions, and those things were problematic, and they drove our base away. Almost 50% of the people who originated loans that were insured by FHA were depository banks. That number is down to less than 15% now because of the way that people have fled. So we really looked at all of that, and we said, what can we do to fix this? So we really revised the annual eligibility certifications, the loan limit certifications, and the defect taxonomy so that we even out things. Non-material errors are looked at very differently now. And this doesn't mean by any stretch of the imagination that we're not going to vigorously pursue fraud and people who do things intentionally. But non-material, ineffectual things, we're not going to torment people about those. We will make sure that they learn from them. You know, our servicing of the servicers is much improved in the new financial revision package. And there are a lot of people talking about affordable housing now, you'll notice. But this is something that actually will make a difference.
Not everyone, just to summarize, these are mostly first-time and low to moderate moderate income home buyers. With only 15%, less than 15% of the lenders now being depository, who picked up the slack, and was it picked up? And what's the problem with the entities that are doing it right now, Mr. Secretary?
Yeah, well, the non-depositories have helped to fill in the gap, and we love them. They're wonderful people. We enjoy working with them. But, we want to expand the credit pool for low and moderate income people. The major mechanism for building wealth in this country is home ownership. And doing it in a responsible way, that's the key. And this is all looked at in terms of sustainability. Not only do we want to put people in homes, but we want them to be able to stay in those homes so they can accumulate that wealth. So we need, all the people in the market, but we most definitely need the depository lenders to come back. Well, and already many of them have contacted us about getting training for this, also more training for the condo. The condo rule came out very recently, too. These are things that will make a difference for low and income people.
The non-depository institutions are not regulated as highly. Have there been more problems with these lenders, or what? And How many do you expect to get back to? 45%, 50%, where that would be more highly regulated, and the banks themselves. Do you expect to get back there after this, or it's slow going?
I suspect things will normalize once we once again establish a normal environment for people to work in. You know, we live in a society where market forces rule. And market forces mean that people look at the things that are advantageous to them, things that are not advantageous to them, and they act accordingly. So I think we'll get back to a very good place very quickly. But again, I do want to emphasize, we love the non-depository lenders too, but we want to normalize the market once again.
All right, well, good luck, Mr. Secretary. Come back and update us on the progress here and other things you're working on. It's been a while, as I said, and we hope to see you again soon. Thank you.
Thank you very much.
Okay. Coming up when we return, some big names report this week, including 3 of the FANGs, Facebook, Apple, and Google. We're going to get you ready. We'll do it next. Stay tuned. You're watching Squawk Box right here on CNBC.
This CNBC program is...
I've got to tell you about our beautiful city break in Bath. Midweek is the perfect time to beat the crowds. Just an hour and a half by train from London. It was so relaxing. We headed straight for Bath Christmas Market. Oh, I can still smell the roasted chestnuts and mulled wine from the chalets. We dropped off our Christmas shopping at the hotel. Then it was off to be spellbound at the Theatre Royal Bath. There's so much to do in Bath. I'm already...
Buy them something that's for life. Premium bonds from NS&I. Every month they'll have the chance to win cash prizes. And now you can buy premium bonds for any child. Start their savings journey from just £25. Search Gift Premium Bonds to find out more.
I've always loved a kitchen experiment, especially smoothies. I've blended all sorts of mad combinations. Strawberry and charcoal, broccoli and chocolate. Not my best, that. But when I test blenders in the Witch Lab, it's not about flavour, it's about performance. Our tests use proper tough stuff, hard ice, strong veg, rough nuts. And the blenders that can hack it are the only ones we recommend for your kitchen.
Which tests harder so you can buy smarter. Visit which.co.uk.
These eyes watched you bring my world to an end. This heart.
Welcome back to Squawk Box. This week marks the moment of truth for a few of the FANG stocks. We're going to get quarterly results from Facebook. We're going to hear from Apple. We're going to get Google, all happening this week. And here to run us through some of the earnings expectations, we're joined this morning by Dan Ives. He's Managing Director at Wedbush Securities. Dan, let's start with Alphabet. Out after the bell today. What are you expecting? What are you looking for?
Yeah, it's really all about advertising growth. I think if you look from a mobile impression perspective, that continues to ramp. Look, YouTube continues to be front and center. I think that, from our perspective, is going to be better than expected. And I think this is something that's been a Jekyll and Hyde story. Look back at 1Q and 2Q. I view it as a step in the right direction, not just for Alphabet, but for broader advertising.
Is this a guidance story in terms of what we're going to hear?
I think it's a guidance story a bit, but I think there's also worries about what's happened, broader regulatory issues. Is that impacting the model? Are you seeing it in terms of advertising? I think the key thing is YouTube and just overall mobile impressions. That's something that continues to ramp. You look at TAC, that's going to be another thing that investors are focused on. But I do view you take a step back as a positive catalyst for the stock.
And what's your expectation on the stock right now? Right now, we're at $1,274.
Yeah, I think there's a stock, 1,500 could be the next step. And I think I view this as sort of something where this is sort of a quarter where I think the street's really not convinced that the advertising story is going to be
is going to hold up. That's the question.
But the key variable is cloud. If you look at Google Cloud, that's the key variable. Look what's happened with Microsoft, Amazon. That could be, from a market share perspective, 10 to 15 billion type revenue stream. That's going to be a key variable.
What about costs? People are always looking at the costs that Google's got, Google's spending.
Yeah, and I think you'll see that maybe tick down a bit. And I think that's something where, along with the advertising as well as Google Cloud ramping, that could kind of be the trifecta.
Is that going to make you feel good long term or just short term?
I think
on the cost side.
I think it makes you feel good next 6-12 months. The broader worry, and obviously Zuckerberg and Facebook contending with this as well, the increased amount of spending, just given privacy and what you're seeing from a regulatory perspective, that definitely is a risk. But I think investors right now view that as more background noise rather than impacting the stock.
You know, there's a story out from the Washington Post over the weekend that said Sundar Pichai It was internal video that was captured saying that they're concerned about some of the unrest with the employees, that things have been difficult there. How big of an issue is that? We've heard rumblings about it here or there, but do you think it ever shows up and actually affects what the company is able to do?
Yeah, and I get to spend time in the Valley a lot. I mean, that's been a sort of turbulent situation. I think they have done a good job containing that in terms of you're not seeing in terms of numbers. But the big thing is, especially some of these core initiatives, you look at Google Cloud and others, I mean, they have some pretty big growth initiatives. You can't lose employees, and you definitely need to see that where everyone's sort of behind it. So right now it's contained, but I think that's something the street's laser focused on.
Okay, I want to hit your ideas on Facebook, and also want to touch on touch on Apple rather. But Facebook first, given that they have been in the news for the past 2 weeks, especially when it comes to what's happening in Washington.
Look, I mean, ultimately, if you look at core user growth in terms of MAUs, I think that continues to be better than expected. Okay. You look at what's happening in advertising, that's where it's one where you look at numbers and fundamentally, and you've seen with the stock, a lot different than the noise that's going on in the Beltway in Brussels. No doubt they're continuing to invest significantly in terms of the bottom line, but right now investors are focused on advertising.
What do you think this stock could be worth?
I think it's a sort of 220 first stop.
220 first stop at 187. That's pretty bullish.
Yeah, in my opinion, in terms of FANG names overall, we view it as 10 to 15% higher, and I view this as a positive catalyst for Facebook, despite what we're seeing in terms of the investment profile.
Okay, and then let's talk Apple.
Look, Apple, I view it as, ultimately I view it as a silver bullet growth in terms of iPhone 11. We've talked about in terms of our Asia checks. China right now is tracking 15-20% above on iPhone 11. And this is the drum roll into the streaming TV later this week being launched. I view that some of the parts, that's a stock. 265 in terms of what I view the next 6 to 9 months. This stock could have a 3 in front of it when you start to view that services business.
There's one question on the services and the TV piece specifically, because we are going to be hearing a lot about it this week since it's launching. The question on that is, since these devices are given away, or since people are buying these devices and the service, the TV piece, is going to be given away for free, how are you actually going to be able to do any measurement as an analyst or investor for the next 12 months about what that's going to look like? What's the turn on that? Do you say to yourself, okay, if they have 50 million people that are locked into the TV service, that 90% stay, 80% stay, 50% stay, 30% stay? What kind of math do you do on that?
Yeah, right now our math, just given covering Apple for all these years, we think math initially will be about 20% churn in terms of unfree that will ultimately continue to subscribe. And then you kind of
20% continue to pay.
So I think 20% churn out, 80% pay.
So if you have 100 million people, right, that's the expectation at the end of the year?
Yes, our view is that they'll have 100 million subscribers in the next 3 to 4 years. I think the first stop this year will be about 20 million.
20 million paid.
20 million consumers, I think about half those will be paid. You go into the year 1, year 2, you're going to have somewhere between 40 to 50 million paid on a trajectory to 100 million paid in 3 to 4 years. That's the key for Apple here. Content's the whole, but we think they significantly step up original content, as well as it's our view that they will buy a studio in the next 6 to 9 months.
You think they will?
We've talked about MGM, Sony, A24.
Because you think they just need the content?
They've built the castle. They need to fill it with content. That's really this thing that, in our opinion, will be the key variable here for Cook and Cupertino.
Okay. Dan, thank you. Appreciate it.
Thank you.
Nice to see you.
Still to come, we will take you live to California for an update on the deadly fires that have displaced hundreds of thousands of people and left millions without power. Plus, much more on the streaming wars. Apple's new service launches on Friday, and we are just about 2 weeks away from Disney's streaming program. What you need to know about the new offerings is straight ahead.
Squawk.
Why is Lizzie going rental for Fizzy Haze? Is it because her flat is so beautiful and spacious? Snazzy! Or has roof terrace, garden and party room? Surprising! Or because it's 18 minutes to Paddington? Easy! With friendly staff on hand to take any deliveries? Amazing! Or just because her fuzzy friend can live there too? Find your new home at fizzyhaze.com. Fizzy Living, reinventing renting.
With school runs costing as little as 2p per mile, the electric car is now the car. Search Go Ultra Low to find out more. Cost based on Economy 7 and may vary.
Time is money. Or so money says.
Well, money, I know you like to dictate every hour of every day, add to my to-do list and throw the odd spanner in the works. But not anymore. This is my business, and I run it on my watch. I'm in control now, money, and times are changing. Save time with instant business invoicing, now on the Barclays app. Search Barclays Business and make money work for you.
Must have a Barclays business account. T's and C's apply.
In cinemas November 15.
So you're going to build a car to beat Ferrari?
With a Ford. Correct. Get ready for Le Mans 66.
I hate guys like us because we're different.
Starring Matt Damon and Christian Bale.
What are they doing? Making your car go faster. That's more like it!
Based on the incredible true story.
You got a plan? It's high risk.
Of Ford versus Ferrari.
No, I thought the whole point was to win the damned race.
Le Mans 66.
Hit it.
In cinemas and IMAX November 15.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
What can you get from Tesco for £1 each this Halloween?
A pumpkin.
More.
A spooky pumpkin cup.
More.
Ghostly balloons. Spine-tingling spider webs. Ghoulish plates and napkins.
More. Yes, it is scary what you can get for just £1 each this Halloween.
Tesco. Every little helps. Available in selected larger stores.
Hi, I'm back. I just set a personal best on my park run. Feels great.
That's lovely, Mike. I think you've earned the right to put all the bins out.
Hey?
With Vitality Life Insurance, you get properly rewarded when you're active. In fact, you could save over £730 every year in discounts and rewards from our partners. Join over 1 million customers. Just search Vitality Life. Vitality. Positively different. Annual savings available with certain plans and are dependent on members' usage of rewards available. Terms and conditions apply.
An update now on the fires tearing across Northern California, forcing hundreds of thousands to evacuate and leaving millions without power. Jane Wells joins us with more. And Jane, how are you?
Hi, Becky. I'm at the Soda Rock Winery, very well known here in Healdsburg, and one of the 94 structures destroyed in this fire. But welcome to the world's 5th largest economy, California, where apparently one way to deal with hurricane-force winds during fire season is to flip the switch and turn off the power to over 2 million people. Now, we drove through active fire to get here this morning, and the latest on the Kincaid fire, 54,000 acres, so it's pretty much doubled in 24 hours. 5% containment, 80,000 structures threatened, an unprecedented 186,000 people still under evacuation orders, 2 firefighter injuries, and incredibly no known deaths. Now, even so, much of the Bay Area, the technology capital of the world, remains in the dark as PG&E preemptively cut off power to avoid falling power lines sparking fires. And power will stay off to a lot of people through the next wind event, which starts tomorrow. So a lot of people are just throwing out the perishable food, letting the beer in the fridge get warm, and if you're evacuated, praying your house is still there. Now, PG&E, which is in bankruptcy, has had a power failure of its own on Wall Street, as news that despite the preemptive blackouts, there's a possibility this fire was started by a PG&E transmission line. And down south, SoCal Edison, while there is another fire down there along the 405 this morning, it's warning over 300,000 customers about the potential of the power being shut off in the next 24 hours if the winds kick up again down there. You should be looking at a map of the active fires in California right now. The governor has declared a state of emergency for the entire state. He told Bloomberg he'd like Warren Buffett to make a bid to buy PG&E out of bankruptcy. And the mayor of San Jose, guys, is suggesting that PG&E become the nation's largest customer-owned utility with 5 million customers. By the way, PG&E reports earnings a week from today. Guys.
Hey, Jane, just in terms of PG&E and how people feel about the company right now there, what would you describe it? You hear Gavin Newsom making this call to try and get Berkshire Hathaway in to buy it. You hear the San Jose mayor saying we should just take it over and have it publicly owned. I think PG&E's response to that was that their transmission offices weren't for sale, none of their operations. But how do people just generally feel about the company?
I feel they're mixed. The governor's furious, blaming a lack of upgrades in the infrastructure. PG&E says it has been doing some upgrades. At the same time, if you talk to somebody like, hey, I'm going to lose power for 48, 72 hours, that is a pain, but at least maybe houses and lives will be saved. PG&E is claiming that despite the possibility this fire might have been caused by a PG&E transmission line, it has shown pictures of tree branches on de-energized lines saying, hey, look, if we hadn't turned that off, it might have been worse. So I think the bottom line is a lot of people in California are saying we are the wealthiest state in the nation. We're the 5th largest economy in the world, and we haven't figured out how to keep the lights on during fire season.
It's not a short-term solution, though. I mean, this is decades and decades of underinvesting in the infrastructure.
It is. And there was an op-ed in the Wall Street Journal saying the utilities have been forced by their political overlords to invest in other things. And ironically, this is the solar power capital of the world, but most solar power systems at homes are in the grid. So if the grid goes down, they go down. And now people are interested in buying batteries from like maybe Tesla so that their solar systems can continue to work off the grid. But those are very expensive. I mean, they're like $13,000, $14,000 for a home battery system.
Right. Jane, thank you. Jane Wells.
All right, coming up, Tiffany shares soaring on news of a potential luxury merger. We'll get analyst reaction next. Plus, don't forget to subscribe to our new podcast. You'll get interviews, original content, and much more. Stay tuned. You're watching Squawk Box on CNBC.
Orlando isn't just the theme park capital of the world.
Just because you travel doesn't mean you can't keep your routine. The more obstacles travel puts between us and our well-being, the more we strive to sleep well. At Westin Hotels and Resorts, we're focused on empowering your well-being. With our award-winning Heavenly Bed, you can get the restorative sleep you need and meet the challenges of the day head-on. Don't leave your well-being behind. We give you the choice to get up or to rise. Search Westin online to find out more. Westin, let's rise.
They don't chant your name when you give blood or sing songs about you. But patients and their families will remember you forever. Because your blood can change their lives. We need more blood donors in Tooting, the West End and Edgware. Bleed for London. Join us today at blood.co.uk.
It's hard to find a children's gift which doesn't have a short shelf life. They'll eat all the chocolates in 5 minutes, finish their video games by the end of the week, and grow out of their trainers before you know it. So instead of buying them something just for Christmas, buy them something that's for life. Premium bonds from NS&I. Every month they'll have the chance to win cash prizes. And now you can buy premium bonds for any child. Start their savings journey from just £25. Search Gift Premium Bonds to find out more.
I've always loved a kitchen experiment, especially smoothies. I've blended all sorts of mad combinations. Strawberry and charcoal, broccoli and chocolate. Not my best, that. But when I test blenders in the Witch Lab, it's not about flavour, it's about performance. Our tests use proper tough stuff, hard ice, strong veg, rough nuts. And the blenders that can hack it are the only ones we recommend for your kitchen.
Which tests harder so you can buy smarter. Visit which.co.uk.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Welcome back to Squawk Box on CNBC. We are live from the NASDAQ market site in Times Square. Let's get you caught up on some of the stories that investors will be talking about today. The average price of gasoline is down 4 cents over the last 2 weeks. That's according to the latest Lundberg survey. That puts the average price at $2.68 a gallon, which is 24 cents lower than it was a year ago. Some earnings reports of interest are set to hit the tape after today's closing bell. We'll be hearing from Google parent Alphabet, as well as Beyond Meat and T-Mobile US. And Walmart and Procter & Gamble are butting corporate heads over dishwashing soap. The Wall Street Journal reports that Walmart has put up signs at many of its stores warning customers of a national supply shortage. However, many of those signs were posted on shelves that were fully stocked. Procter & Gamble had told retailers of a possible crunch that could result in a shortage of supplies for a period of time. But the paper says that P&G was not pleased at Walmart's action, saying that it could result in a run on dishwashing soap.
And Tiffany has now confirmed the receipt of that takeover offer from France's LVMH. It advised shareholders to take no action pending a board review. LVMH, whose brands include Louis Vuitton and Christian Dior and Dom Perignon, has offered $120 a share in cash for the upscale jeweler, Blue Box, of course. That would value Tiffany at about $14.5 billion. Joining us right now on the Squawk Newsline is Oppenheimer analyst Brian Nagel. Brian, my understanding is that the board, while they're going to go through the motions of examining it, if you will, examining, I put in air quotes, that they will reject this bid as being too low. The question, of course, now, and you can already see it in terms of the stock price, where things go, how much do you think LVMH can afford to pay, and how much will they pay? We're looking at Tiffany, by the way, at $130, at $10 already over that price. The high, by the way, was about a little over a year ago at $136 a share.
Well, good morning. This is very interesting, and it's been very fluid over the past, say, 24, 48 hours now. To answer your question, Andrew, I don't think Tiffany sells at 120. I do think Tiffany is interested in selling to LVMH. Now, to give the price, I put out a comment to our clients this morning. I think it's around 140. There's a couple ways I get there. This is one's relatively simplistic. It's exactly what you said. July of 2018, Tiffany traded just below 140. I'm hard pressed to see the company sell for a price where that's lower than where the stock traded on its own. Because that's one way to get to the other 40. The other way I look at it is LVMH bought Bulgari, which is a company that's somewhat similar to Tiffany back in 2011. They paid a multiple, 4 to 4.2 times sales. If you apply that same type of multiple to Tiffany, you get a price around 140. So I think that's where that's a likely takeout price for Tiffany.
So $140 a share. In terms of what LVMH can afford to pay, dilution, everything else, I mean, obviously LVMH is 10 times the size of Tiffany.
Yeah, and that's hard for me. It's harder for me to say because I don't follow LVMH closely. You're 100% right about just the sheer size of the company, and also show just the mentality of this company, or say the personality of this company. They have clearly made a number of acquisitions of high quality brands in the past, so they have a willingness to buy. But it's hard for me to say exactly where LVMH could pay up to. I think they could very much pay the 140.
Pay the 140. And in terms of timeline, I don't know if you focused on the board of Tiffany. If Tiffany were to say, no, we're not interested, could you imagine LVMH going hostile in terms of looking at their fiscal year when the proxy season begins?
That's also, from my vantage point, that's the answer, just because I don't know LVMH as well. But I would say from going the other way, and going back to what I said, a second ago, I think you have what I would consider with Tiffany, a motivated seller here. And it's an interesting dynamic. So there's a relatively new management team running Tiffany. They've done a lot of good things. They've been repositioning the company successfully, but we really haven't seen that yet in the results. Fundamentally, I tend to think the second half of 2019 will be challenging for Tiffany. So I think, and I look at from the other side, I think Tiffany is a potentially motivated seller here to get paid for the work that they've done that's unlikely to show up in the stock price on its own.
Got it. Brian, thank you so very much. Appreciate it.
Thank you. Nice talking to you.
The future. It's here. I'm so excited. The next few weeks shaping up to be a critical ones for some major streaming companies like AT&T reported earlier today. We've got results there we want to talk about. But tomorrow is Investor Day for HBO Max. On Friday, we get the debut of Apple TV+. November 12th brings the launch of Disney+. For more on AT&T and media's big run, let's turn to Rich Greenfield. He is founder of Lightshed Partners, and Tom Rogers, who is the first president of NBC Cable. You look okay. You all right? Is it the end of cord cutting? I don't know. The beginning, it's going to accelerate, Rich?
based on AT&T this morning, we're just getting started. I mean, AT&T had, I think they lost 1.3 million subscribers in a quarter.
Well, this would seem to be something that could accelerate, except all the companies that are involved are the cable companies, too. Some of them, anyway.
Yeah, I mean, look, I think this is just a fundamental shift in consumer behavior. The idea of subscribing to a large bundle of channels when you can pick and choose your streaming service. Some customers may like Netflix, some may like HBO Max. They're gonna, you're gonna build your own bundle now, just like you build the apps on your phone. You're gonna choose what you subscribe to. And the good news is, no waiting for an installer to come to your house anymore. You're just going to click on and off what you like and what you don't like. And even companies like Comcast are now enabling it. I mean, Comcast rolling out a flex box where you just bring your own, you get a device when you sign up for broadband, and it lets you stream all of the services that we're talking about that you're highlighting they're launching over the next few weeks.
You're going to have everything, Tom?
Of course. I'm going to take it all in. But HBO has a lot to prove tomorrow on this streaming announcement day, I should say AT&T. It's very unclear what the strategy is here. Verizon is now boxing them significantly by announcing that it's going to offer Disney Plus free to all Verizon unlimited data customers. And the big promise when AT&T announced this acquisition was somehow the combination of wireless with programming was going to create this unique combination that was going to propel both. Now, both seem to be either stagnating or in decline, and they have a lot to prove, I think, that they couldn't have accomplished this by just renting somebody else's content the way Verizon is versus a $110 billion acquisition where most of what they acquired is in secular decline. And it's going to be much more important than the individual shows they may announce tomorrow. What is the strategy of all this coming together?
How about AT&T? So how about Apple? They got enough they had to undercut everybody else. And
Apple has more cash than everyone else put together.
They don't have enough shows. They don't have enough content at this point.
Do you think they end up buying a studio?
No, absolutely not.
Okay, well, we just had an analyst on 2 minutes ago who said he thought they were going to buy Lionsgate or
they're just wrong. Honestly, they're just wrong.
Buy 100 other things.
When you look at all of the tech companies, they're realizing that all you need is to spend money. Look at Netflix. They didn't buy a studio. Everyone said they were going to buy a studio for years upon years. They had to buy a studio to compete. The reality is when you actually just put cash on the board, talent is more than happy to work for you, especially when you provide a wide platform. And look at Apple. I mean, they're providing access, theoretically, to 1 billion devices around the world.
Whether you need a library. Look, there was a period of time where if you were at Netflix, you had a library. By default, you had a library. You were picking up lots of different shows. Even when you didn't have original programming originally.
But remember, you're not paying for this service until the library starts to build. So you're starting with over 200 million people buy an Apple device. They don't have to pay for it. So you're just going to wake up and have this service for free. I think in many ways that's compensating for the fact that there isn't a library. It's also relatively inexpensive, even if you don't get it for free. So that's also compensating. But if you think about where the puck is going, right? The puck of the future is creating new original programming. It's not the catalog. I mean, I think that's part of the issue for Disney, why they're pricing low, is that they're really relying on catalog. They don't have a lot of originals. Apple obviously has no catalog. They're all betting on originals. These are very different strategies. But the ultimate goal of all of these services, look at Netflix. The goal is to make it as much about original programming and build their own library as possible. And if you look at viewership has shifted dramatically over the last several years towards original programming, and that trend is continuing. So I wouldn't bet against Apple simply because they don't have catalog.
I think
if the new shows are good, people will watch.
I think he hits a key point there. And you have to look at what AT&T just committed to Elliott Management to really put this in perspective. It is all about spending on original programming. I don't quite understand this number, but it looked like Warner had an 8.5% decline in program spend. If you're going to cost manage that company, it is going to be a very different beast when it comes to opening up the pocketbook for original programming relative to Apple, relative to Amazon, relative to Netflix. And it's very hard to see against that kind of environment where HBO, which has been around for 40 years and got to 38 million subscribers over that period of time, Netflix in less than 10 years got to 60 million subscribers. If you didn't subscribe to HBO because of Game of Thrones or Veep or Succession, is there something about adding friends and some tonnage and charging $2 more that's all of a sudden going to drive HBO Max into offsetting all the secular decline of the cable networks?
You need a lot of content to stop churn, right? I mean, the single biggest killer of all of these streaming services is churn. You can literally cancel it in a second. What happened with HBO saw is that when Game of Thrones ended, people canceled. And all of us may like Succession. We have to give a shameless plug, obviously. But, like, Succession's a small show for HBO. They need more things to keep you from churning. And so I think the idea is with Netflix, right? You talk to somebody about Netflix, and there's like, oh, there's so much to watch. There's this and there's that.
I think this is for them, for the AT&T or for HBO, just a matter of trying to avoid decline rather than gain. Because I would tell you that John Stankey thinks he needs more subscribers.
Well, you get more subscribers by reducing churn, right? So if people churn out, they have lots of gross ads. Keeping them is the biggest problem. And
very interesting that at least I did not see in their earnings announcement that they indicated how many HBO subs churned after Game of Thrones went away. That's obviously a key number that they're going to have to speak to tomorrow.
I think that's the single biggest challenge facing streaming services is how do you prevent churn? Disney's doing it with a 3-year offer. They're even now offering an annual plan at a discount. Everyone's trying to figure out how they reduce churn. And I think if you looked at the HBO example, the strategy they're going to employ on the one side is using the AT&T wireless network and trying to bundle it in with AT&T like Verizon's doing with Disney Plus or T-Mobile does with Netflix. But then the other piece of this is going to be broadening the content so that there's something for the kids, there's something for, you don't always want a show that's like HBO. You don't want every single thing you watch throughout the day to be Game of Thrones. You look at Discovery, there's lots of other content that people watch. There's news, obviously. There's lots of other forms. And I think the goal is going to be to diversify HBO Max.
By doing what? By buying something else or
by spreading the content. So the content, they're going to take content that isn't all HBO dramas and comedies.
Into that, right?
It's going to be, I
always thought that would be the plan, though. I thought they were just using HBO as the signature name.
Yeah, think about Netflix. There's Marie Kondo and Tidying Up. There's documentaries. There's stand-up comedy. There's movies like Irishman coming. There's a real diverse set of programming. HBO, you wouldn't say that about HBO. HBO is much more of kind of a quality over quantity. And I think that's going to shift under HBO Max. I assume that's going to be the approach we're going to hear tomorrow. I think the big question, though, is how do you balance new versus old? Who's deciding inside of AT&T what goes where? Disney has this same issue, right? Like what goes into the theaters, what goes onto the cable networks, what goes onto the streaming services. Balancing these businesses, that is hard. And I think that's what all of these companies, you all are going to have the same issue when Peacock launches next year for NBC. These balances of new versus old are really intellectually challenging.
And if all HBO announces tomorrow is some discounted bundling strategy with AT&T, which they will announce, it really does beg the question, did they need to own a $110 billion company in order to accomplish that? And I think they got to come up with some more significant strategy for driving their service, driving wireless. The one thing that AT&T now has versus Verizon, which nobody thought a year ago, was a better 5G story. And if they can come up with some way that 5G combined with programming, combined with wireless, gives them some kind of new edge that maybe they've thought of and nobody else has, that would be significant. But other than 5G, you see a whole lot of challenge at AT&T with no clear path to any of those revenue growths getting better.
The good news is the consumer wins, right? The consumer's got more content at cheaper prices than ever before. Everyone watching this is benefiting from massive investments in programming, really cheap prices, in many cases free. You already are a Verizon subscriber and you're getting Disney Plus for a year. This is awesome to be a consumer. Apple's free if you buy an Apple device. It has never been better to consume content than right now. Just makes it really hard on the legacy bundle.
Right.
Thank you.
Fun couple of weeks. Thanks, Rich. I'm excited. Yeah, I need a Apple program guide that includes everything. And with
pick and choose
with stars of what I really need. Guide? Yeah, like a TV guide. Or you've seen everything happen in your life. You must feel
this is just like the networks when everything was going cable, jumping in. It worked out well for them.
Launched the cable. Could we launch another cable network that's not around? And we did. And that sounds
like worked for the network.
The Stone Age, Tom. It's unbelievable.
The good thing was GE didn't catch NBC in the midst of this kind of secular decline. That's a big difference for AT&T.
Thank you, Rich. Thanks.
Up next, it's the busiest week of earnings season, and we also have a Fed meeting and a jobs report coming this week. So is your portfolio ready? We'll talk strategy right after this.
They don't chant your name when you give blood or sing songs about you. But patients and their families will remember you forever. Because your blood can change their lives. We need more blood donors in Tooting, the West End and Edgware. Bleed for London. Join us today at blood.co.uk.
Breathe in and out. Every day, you take 20,000 breaths, potentially exposing yourself to harmful particles of pollution. According to the Royal College of Physicians, air pollution contributes to around 1 in 20 deaths in the UK. But at E.ON, we believe it's time to do something about it. We've committed to installing ultra-fast electric vehicle charge points. We offer solar panels and batteries that collect and store energy. And we've helped a citywide transport operator introduce a large fleet of emission-free electric buses. It's time to clear the air. Search E.ON Clean Air.
When it comes to music, I've heard it all. Pink Floyd, Sean Paul, Slipknot. But in the Which Test Lab, hearing isn't enough. When we test headphones, we really listen. Not just to the music, but to the stuff that gets in the way. The traffic, the chatter, all that. Mind the gap. We simulate the loudest commute to find you the headphones that cancel out the noise. So you know we're only recommending the best.
Which tests harder so you can buy smarter. Visit which.co.uk.
London, switch to Vodafone, the UK's best mobile network, and V Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Carl's all change casserole.
So, Chloe walks in from school, tears all over her face.
Daddy,
She says,
I don't want to eat animals anymore.
I blooming love my meat, but not as much as I love my little girl. That's why we've made some changes to our old favourite, sausage casserole. Now with meat-free Cumberlands, but still with my magic touch, a dollop of mango chutney. Just as tasty as it used to be.
Better, actually.
Make your own with the new Tesco Plant Chef range. Food Love Stories. Brought to you by Tesco.
Welcome back to Squawk Box. Take a look at futures right now. S&P futures are at the level indicating a new record high at the open. You're looking at the Dow up 105 points. S&P 500 would open up about 9 or 8.5 points. NASDAQ would open up about 32 points higher. Let's get a check on some of today's biggest movers. Dom Chu joins us with more right now. Dom.
All right, so Andrew, we're going to start our Monday morning movers off with shares of Walgreens Boots Alliance, the drugstore and pharmacy benefits company, and Dow Component, up close to 1% pre-market, roughly 40,000 shares of volume. Profits fell from a year ago, but still better than analyst estimates, as were the revenues there. Walgreens saw increased spending related to implementing its cost-cutting initiatives and saw a drop-off in sales due in large part to a decision to de-emphasize tobacco sales. Remember, they still do sell them there, just not as prominently placed. We're also keeping a close eye on shares of Spotify, which are up by around almost 8% right now, pre-market, 100,000 shares of volume. The streaming music and podcast platform posted a surprise profit on stronger than expected sales. It was helped along by stronger growth in a key user metric and the number of premium members that pay a subscription fee. Separately, Spotify announced the retirement of CFO Barry McCarthy, who will step down in January. And then we're going to end on shares of Restaurant Brands International. The fast food company has been moving between gains and losses pre-market, roughly 6,000 shares of volume. Profits matched estimates on worse than expected sales, due in part to a drop in sales at existing Tim Hortons locations. That offset better results at Burger King, driven in part by the meat alternative Impossible Whopper introduction, and at Popeyes, given the popularity of its chicken sandwich, which makes its return guides to menus next month after selling out in 2 weeks in August. Becky, back over to you.
Spicy chicken.
I like the spicy chicken personally, but that's just...
You haven't had one?
I haven't had the Popeyes one, no, but I've had just about every other variety of spicy chicken sandwich out there. I do like the KFC one with the Nashville hot. That's my go-to for right now.
If I need advice on this, I'll come to you, Dom. I didn't realize
you don't get
that.
a figure like mine by turning down chicken sandwiches. So.
All right, the President Trump is at Andrews Air Force Base right now. He's getting ready to depart for Chicago, but in the meantime, he is making some comments. Let's listen in.
They're really looking to hurt the Republican Party, and it's turning out to be just the opposite. So one thing I said, I'd rather go into the details of the case rather than process. Process is wonderful. We already have 50 Republican senators. I never called one of them sign up. 50 out of 53, 50. And perhaps the other ones will do it too. But process is good. But I think you ought to look at the case. And the case is very simple. It's quick. It's so quick. I had a great conversation with the Ukrainian president. I had another conversation with him also, I think before that, which was the same thing. It was nothing. They tried to take that conversation and make it into a big scandal. The problem was we had it transcribed. It was an exact transcription of the conversation. So, in a nutshell, a whistleblower wrote a false narrative of the conversation. Now they don't want to talk about the whistleblower because they didn't think I was going to release the conversation. When I released the conversation, I blew up Schiff's act. And just to put topping on it, the Russian, as you know, the new Russian president, a good man, made a statement. There was no anything. There was no pressure put on him, no anything. The foreign minister of Ukraine made a statement. There was absolutely no pressure put on. They didn't even know what we were talking about. And just to finish it off, Adam Schiff went up before Congress, and he made up my words. He didn't copy what I said. He didn't know him probably at the time. Nobody thought I was going to release the conversation. I got the approval from Ukraine. Once I released the conversation, this thing all died. And that's what they should be looking. And Adam Schiff went before Congress. And Adam Schiff, what he did will never be forgotten. He made up a conversation that was a phony fabrication. It was a fraud. And people shouldn't be allowed to get away. They say he has immunity because he's a member of Congress. People shouldn't be allowed to do that. That's a criminal act. What he did is a criminal act. President, USMCA. I hope they approve USMCA. It's in there. It's a great agreement for the United States, for our farmers, for our manufacturers, for unions, for everything. It's been approved by Mexico and Canada. They're waiting. We don't seem to be able to have time for Nancy Pelosi. I call them the do-nothing Democrats. They're the do-nothing Democrats. And frankly, if they put it up, it's going to win very easily. It's going to have bipartisan support. I have no idea what they're doing with it. I can't imagine it takes this long. But they're so busy focusing on a witch hunt and a scam. Can you clarify something about the Washington?
That's President Trump, who is at Andrews Air Force Base, leaving for Chicago. Ahead of that, he was making some comments to reporters, talked pretty broadly about that phone call with the Ukrainian president, also talked about the whistleblower, and then brought up USMCA, the new NAFTA bill, saying he hopes the Democrats will pass it. Let's get back to the markets right now. For that, we bring in Chris Zaccarelli. He's Chief Investment Officer at Independent Advisor Alliance. Jeff Sout, who is Chief Investment Strategist at Capital Wealth Planning, and our very own Senior Markets Commentator, Mike Santoli. Mike, we got a lot of big things happening this week. The biggest week of earnings to date. But then you've got the Fed and you've got the jobs report. Yep. Which matters most?
I think the earnings continue to matter as an ongoing issue, just better than expected. Reassurance that the freak out in August about recession was probably overdone. The Fed is interesting because the past 5 Fed meetings, you've actually had an occasion for a pullback in the market, a couple of them pretty stiff. It seems like the market, though, isn't demanding very much from the Fed here. Maybe we're okay with a cut this week and then going on hold. So
what if there's no cut?
No cut would probably cause a little bit of a flutter. But on the other hand, I don't think it's happening in the context of a vulnerable attitude about the economy, just because the yield curve is uninverted and you have this situation where it's not as if the people are going to think that that somehow is tough love at this point.
Mm-hmm. Jeff, what's top of mind for you right now? I know that you often don't care about a lot of the macro things that are happening, but what are you thinking right now?
I think Michael hit it on the nose. I think it's all about earnings. When we came into this earnings season, they were talking about earnings being down somewhere between 4 and 5%. Now they're talking about being down 2%. Of the 500 or so companies that have reported, 73% of them, Becky, have bettered the expectation estimates. So I continue to think like Michael does. It's all about earnings, and that we're still in a secular bull market that has years left to run.
Chris, there have been so many concerns, so many worries about what's happening out there, but this morning you're looking at the futures, and we're going to open in record territory for the S&P 500. What do you tell people who come to you and wonder what they should do at this point?
Well, we see a lot of people who are probably overly pessimistic. You look at the BAML Fund Survey of Managers, cash levels are higher than they have been in the last 10 years, much higher than average. We have a lot of retail investors that we speak to that are cautious. They say markets at all-time highs. They're worried about putting their money to work. And we try to reassure them. We say, look, there are things to worry about. Obviously, you've got to worry about trade. You worry about the Fed. You worry about what's happening with earnings. But along all three of those lines, it seems like things are moving in the right direction. Trade, at least for now, where you're seeing a little bit less negative news. You're seeing the Fed poised to cut this week and then probably go on hold, finishing their mid-cycle correction. But that's a big change from a year ago. And then lastly, earnings, as the other two people mentioned, not as bad as expected. So really things are moving in a positive direction. We believe that most people are a little too overly pessimistic, and we're actually very optimistic heading into year end.
Jeff, you say that people should be paying attention to stocks that would benefit from the weaker dollar. What sectors, what stocks are you specifically referring to?
Well, I still like technology. Energy started to come to life the last few weeks. The financials that we've been on for a long time have not done much until the past few weeks. So those are the three top sectors that we like right here. And we continue to think, as we have since October of 2008, that we're in the greatest secular bull market of our lifetimes, and people don't believe it. Chris said it exactly right. I'm out speaking to the public, and they're not just cautious, they are scared to death.
No Kramer. All right. I know we were going to go. I was going to ask him. I mean, I'll ask you, Mike. I was going to ask you, either one of you, but S&P is going to be at new highs. What are the perma-bear? What are the guys that have been consistently bearish? I'm thinking of Mike Wilson. He said still defensive, new highs, the Morgan Stanley. Do you say, okay, maybe we don't see 2750, maybe we don't see 25?
Yeah, I think you just revise up the floor a little bit. But, the market has hit new highs months before recessions before. It's not as if it's incompatible.
Is this the high end of a range or a new bottom of a range?
What we're hitting right now?
Yeah. South?
I don't think it's the ceiling, if that's
you don't. Maybe it's, middle of the room, something like that. All right. Anyway, up next, stocks setting up for a record open. Full market rundown next. And then tonight on Mad Money, don't miss Kramer's interview with eHealth CEO Scott Flanders. Stay tuned. We'll be right back.
At Synchrony,
whatever job you're searching for, you can find it on LinkedIn. First jobs, flexible jobs, work from home on a Friday jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, Soho jobs, Shoreditch jobs. Keep me away from the central line jobs. Banking jobs, building jobs, never ever boring jobs. Small jobs, big jobs, lunch in Borough Market jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
Time is money. Or so money says. Well, money. I know you like to dictate every hour of every day, add to my to-do list and throw the odd spanner in the works. But not anymore. This is my business, and I run it on my watch. I'm in control now, money. And times are changing. Save time with instant business invoicing, now on the Barclays app. Search Barclays Business and make money work for you.
Must have a Barclays business account. T's and C's apply. Breathe in and out. Every day, you take 20,000 breaths, potentially exposing yourself to harmful particles of pollution. According to the Royal College of Physicians, air pollution contributes to around 1 in 20 deaths in the UK. But at E.ON, we believe it's time to do something about it. We've committed to installing ultra-fast electric vehicle charge points. We offer solar panels and batteries that collect and store energy. And we've helped a citywide transport operator introduce a large fleet of emission-free electric buses. It's time to clear the air. Search E.ON Clean Air.
I've always loved a kitchen experiment, especially smoothies. I've blended all sorts of mad combinations. Strawberry and charcoal, broccoli and chocolate. Not my best, that. But when I test blenders in the Witch Lab, it's not about flavour, it's about performance. Our tests use proper tough stuff, hard ice, strong veg, rough nuts. And the blenders that can hack it are the only ones we recommend for your kitchen.
Which tests harder so you can buy smarter. Visit which.co.uk.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Welcome back to Squawk Box. Get ready for a wild ride at the Open. We should tell you right now, you're looking at futures pointing to a record high, 134 points higher. Make sure you join us tomorrow. Squawk on the Street begins right now.
I'm Carl Quintanilla with Jim Cramer, David Faber at the New York Stock Exchange. Get set for all-time S&P highs at the Open as the president and China both say there's progress toward a phase one signing. We've got a likely 3-month extension on Brexit, a weekend of M&A news, and the busiest week of earnings. Europe's mostly green, 10-year yield, 6-week high. We'll get GDP and jobs numbers this week. Our roadmap begins with all-time high alert, kicking off the busiest week of earnings with the S&P on track for a new record, the Dow and NASDAQ not far behind.
Plus, shares of Tiffany are surging this morning ahead of the bell. French luxury group LVMH confirms interest in acquiring the company for $120 a share.
And the next investing frontier, Virgin Galactic, set to make its public debut here at the New York Stock Exchange this morning. Sir Richard Branson will join us first on CNBC. So, markets are chasing some history this morning. The S&P is on track to open at an all-time intraday high. On Friday, closed within 6 points of that record level after being fractions away from setting a new milestone. Jim, a lot of the bears arguing what's gotten here from July has been healthcare and utilities and REITs.
Well, I think that I was going over a couple of companies this week that reported this weekend. Illinois Toolworks reported, Dow, right? The railroads reported. We got Honeywell. We got United Technologies. Every single one of these were much better than expected. And they were much better expected from either self-help or because the world's not as bad as we think. So you've got companies that had been formerly cyclical that have much more of a secular component, including Jim Fitterling, who was saying, listen, we're getting a bottom in some key chemicals. So the leadership has subtly shifted to big tech because of Intel and to the industrials, because it turns out that the industrials are not as, let's say, not as perturbed about China as you would have thought. It's rather remarkable. I think that there's some mea culpas that we need to hear from the people who said that cyclical America would be damaged. That said, if you're the Fed, the dollar is the single worst thing that in every single quarter. It's the dollar. But, boy, I really liked the industrials that reported last week. They were very solid, really solid.
S&P still tracking down 3.8 year on year.
Right.
Most sectors showing less than 1% EPS growth. The best sectors are healthcare, utilities, and REITs. So how do you chase growth? You chase cyclicals?
There's so much growth that's still way down. The Cloud Kings are way down. I saw a note today about Atlassian. I know these seems like they're somewhat irrelevant, but it's a company that's a software as a service company. Those stocks are still way down. ServiceNow last week was better than expected, went down because of the change by Donahoe going to Nike and McDermott going to ServiceNow. I think that don't need to chase growth. There's plenty of growth that's still for sale. Plenty of drug companies that are still for sale, whether it be Eli Lilly, which did disappointed, Merck, which is down because of Bristol Myers. I think that there's a lot to buy there. A lot of people feel, by the way, that Amazon really disappointed. I go over Amazon, and if it weren't for the fact that they lost this contract, which is a very important contract, lots of cash flow involved, I come back and say that you just literally are looking at Amazon being set up for the next big thing, which is next day. If you ask me about the most important call last week, it's still going to be Intel. That reverberates throughout because it's data center. Looks like data center is being spent again, and we're going to talk about an acquisition that was made that I think people don't realize, that Liberty has a lot of data center, but chiefly it's e-commerce. I should say it's e-commerce. But that's a deal that is, for those of us from Philadelphia, is remarkable. That's Bill Rouse. That's the Comcast Tower, the Four Seasons at the top. An important deal. There is not much negative today, and I think that it's important to point out that when you have Microsoft up and you have Intel up, you really have kind of the old days. The worst one last week was Twitter, and I am still scratching my head.
By the way, LPL today says October 28th is historically the best day of the year.
Oh, come on.
For stocks. Yes.
Today.
They have the whole screen.
Today is the best day.
They have every day screened out, and it's the greenest of the green.
I feel terrific about that. David, it must be like the old days when AT&T led it, wouldn't you say?
Well, it may lead it today, and we got to spend a lot of time on AT&T, an important story this morning. Not just the earnings, of course, but even more importantly for AT&T. It's... Well, it's not a settlement in the terms that we typically use between an activist and a company, because there's nothing that they've agreed to in terms of writing or anything along those lines. But they have the full support of Elliott. They've come with this 3-year plan. We want to get into that in some detail. Although I guess now, well, there it is. The key here for AT&T, guys, is their expectation that they can both increase revenues over the next 3 years between 1% and 2%. And that they can increase margins by 200 basis points. And it's interesting, in speaking with Randall Stevenson earlier this morning, and also obviously looking at what Elliott had been after and talking to people who were involved in the conversations, it all went quite well, I'm told. The communication between Jesse Cohn, who runs the activist practice at Elliott, and Mr. Stevenson was quite strong and significant. I spoke to Stevenson earlier, and he's said a number of different things. We're going through them too quickly, guys. Let's take them down for a second if you can. As we sort of move along, we'll tell you exactly what it was he was talking about. There it is. We're at a unique moment, and he wants to see it through. That's kind of a key thing here. And why is it a unique moment? Well, a lot of the investment that they say they've been making over the last 5 years at AT&T is going to start to come to fruition, they believe. The call, by the way, is going on right now. For the quarter, which was okay, the wireless business was strong. DirecTV continued to have significant subs. There's Stanky. We're talking about, of course, Randall Stevenson going to stay on through 2020. That's another part of this announcement this morning. They're also going to split the chairman and CEO jobs once Randall Stevenson steps down. And we talked about John Stanky as the potential heir apparent. He said, listen, he's got a big job. You saw it right there. He's certainly got to be somebody who's going to be considered for that job if, in fact, he delivers. And that's going to be a key. In fact, tomorrow is a big day for AT&T as Warner Media rolls out its plans for HBO Max, the big streaming service. But back to the plan this morning, and the reason the stock is up, guys, is because they're going to have 35% margins, up from 33%, generate an additional $6 billion in EBITDA by 3 years from now. And with that additional EBITDA, they're talking about both buying back significant amounts of stock. In fact, most of the stock that they issued for the Warner deal, and continuing to reduce debt while modestly increasing the dividend. You put all of that together, of course, and you might imagine that Elliott is quite pleased, because these are many of the same things that they had been asking for in terms of both capital allocation and cost cutting. And yes, cost is going to be an important part of this. In fact, the company says, listen, we're aligned with Elliott on capital allocation, cost cutting. They challenged us, though, how they communicate those goals. And that is sort of the key here as well, because we've got it all in writing. And in fact, they've also hired Bill Morrow, a gentleman, to oversee the execution specific to cost cutting.
Heavyweight. I'll tell you what's interesting, David. You and I have seen over and over again that Elliott might come in with a plan, and there'll be some CEO who resists it. Is this a man who wants his legacy to be known as a much higher stock price? Because this plan will get higher stock price.
You know, I think that's such an important part of this, and the way that it would be portrayed at this point is it's all about legacy for Stevenson. The next year or two, however long he remains in the job, let's call it, is going to be the time that he feels he can deliver on many of the things that he's set in motion. Now, we can debate the merits of the DirecTV transaction, particularly given the massive sub-losses. Another 1.4 million when you put in both DirecTV and AT&T now, the former DirecTV now. But he did tell me as well, there it is, those sub-losses have peaked with the current quarter. So he did say that is the case, and points out that they are still generating $4 billion in cash flow from that asset, which is obviously important to their strategy. But yes, Jim, I think that's a very important point. And I think that's why Elliott also feels like they're in a potentially good position here. He wants to deliver and or have his legacy be a higher stock price than is currently certainly the case.
Is there
by delivering on so many of the things that he's put in motion? You know, they're talking about increasing earnings per share. 40 cents of that will just come from the share buybacks. 25 cents a share will be from cost reduction. Another 20 cents a share from the Warner synergies. Now you take 10 cents a share out for HBO Max, but it gets you to the number that they're talking about in terms of earnings per share fairly quickly. Will they get there? Unclear. Can they get there? Certainly would be a potential thing. And Elliott's going to be a long-term investor here. No settlement. They can do what they want along the way, although they do seem to have agreed on some additional board members as well.
It does seem that they can buy all they want if they like this plan. And David, it sounds like a no sacred cow situation. If you're bringing someone from the outside, I mean, it makes it so much easier to untangle what was wrong.
And I think no sacred cows is one of the key things that they're sort of going to try and let people know in terms of the portfolio review as well that they're going to be doing. Overall, immediately starting a comprehensive portfolio review, evaluating opportunities for all assets, including DirecTV. But that's over time.
Right.
The key thing are these financial metrics that they chose to communicate publicly for the first time, Jim, and that are the reason. Because I think if you just had this quarter in isolation, you would not see the stock up almost 4%.
Don't want to be too granular, but I know Elliott wanted 300 basis points EBITDA margin expansion. ATT's talking about 200 basis points. Is that going to be a conflict?
No, it's not a conflict. They're happy with the 200. They're happy that they're going in the right direction, and they obviously believe that perhaps they're under-promising and can over-deliver on the margin expansion. Now, listen, some of it's going to come with costs, and it's going to come with potential jobs. You've got to know that, right?
But it's really worth going over and spending the time because it remains a very big retail holding of which people have said, you know what, I'm in the wrong one. I should be in Verizon. I think that this plan is a solid one. I also think, by the way, that, geez, a 5.5% dividend that is clearly, David, you've got to admit it's covered. Cash flow is good.
That's been a key question, and the performance of Warner is going to be a key question.
Yes.
Without a doubt, that's why tomorrow is an important day for them. 3 p.m. Eastern is when they'll begin the presentation. Sorry, 6 p.m. Eastern, 3 p.m. Pacific is when they'll begin the presentation for HBO Max. It's going to be very important in terms of judging the ability of that company to sort of navigate these quickly changing distribution platforms that we have in this business. And obviously DirecTV has not done as well as they might have hoped, despite the fact that it does still contribute a good amount of free cash flow.
Super analysis. Thank you. Super.
Yeah, a lot more to get to, including we'll get to Tiffany after the break. By the way, we mentioned earlier Virgin Galactic becoming the first publicly traded space tourism company, and we'll have an interview with Sir Richard Branson, Sir Mouth Palihapitiya, and CEO George Whiteside later on this morning. Coming off of that chase for the all-time high, looks like we'll get it at the open as we need 30.2798. More Squawk on the Street in just a moment.
I've got to tell you about our beautiful city break in Bath. Midweek is the perfect time to beat the crowds. Just an hour and a half by train from London. It was so relaxing. We headed straight for Bath Christmas Market. Oh, I can still smell the roasted chestnuts and mulled wine from the chalets. Next, we donned our skates for Bath on Ice. I'm a natural. Didn't have to hold on to anything. Or anyone. There's so much to do in Bath. I'm already planning my next trip.
Discover the magic of Bath this Christmas. Plan ahead at visitbath.co.uk/Christmas.
Why is Lizzie going rental for Fizzy Haze? Is it because her flat is so beautiful and spacious? Snazzy! Or has roof terrace, garden and party room? Surprising! Or because it's 18 minutes to Paddington? Easy! With friendly staff on hand to take any deliveries? Amazing! Or just because her fuzzy friend can live there too? Find your new home at fizzyhaze.com. Fizzy Living. Reinventing renting.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
3 is a magic number. 300 schemes to help bugs and bees, supporting environmental needs. 8,000 grants for local sports, and performing arts get our support. 7 millionaires every week, the nation's on a winning streak. 30 million pounds to good causes every week. Who'd have thought it? These are magic numbers.
Your numbers make amazing happen. 25 years of the National Lottery.
Rules and procedures apply. Players must be 16 or over.
new Halifax Family Boost Mortgage. Children can get help to buy their first home, and mum and dad earn interest on their savings. Everyone's a winner. The new Halifax Family Boost Mortgage. Halifax makes it happen.
Your home and savings could be at risk if mortgage repayments are not maintained. Only available in England and Wales. One applicant must hold a Halifax Reward or Ultimate Reward current account. Conditions and exclusions apply.
Hurry to TradePoint. The 3 for 2 on all paint offer ends this Sunday. Plus, if you have loyalty discount, you'll get this on top. From Dulux Trade to Leyden Trade. Don't miss 3 for 2 on all paint at TradePoint. Every third item per single transaction in descending price order free. See tradepoint.co.uk.
Tiffany shares surging in the pre-market. Company confirms it has received that unsolicited takeover bid from LVMH, the luxury goods giant run by billionaire Bernard Arnault. Offer valued at $120 a share in cash. Says that while the parties are not in discussions, the board's carefully reviewing that proposal. This was a $73 stock in December, and David's got more on what their response might be.
Yeah, well, we'll see. You know, the next couple of weeks, let's call it next week or so, you can expect there are going to be a number of sessions of this board. They're going to sort of review the plan, review the bid itself. They only hired advisors late last week on the banking side. And so you had a letter that was sent on the 15th of October. By the way, I can tell you that LVMH has been considering at least a potential purchase of Tiffany for the last 2 years. Right. Bernard Arnault thinking about it, Jim, for that long a period of time. But it was October 15th. They sent the letter, the 120 price tag. These guys did not hire advisors till, let's call it, middle of last week or so. They're finally getting together. So it's going to be at least another week, perhaps even more, before Tiffany has some sort of response or chooses perhaps to participate in discussions to see what can be done here. 120 obviously is not the price at which they're going to accept, and you can see the stock is trading above that, and the expectation that investors have that it will be a higher price. Let me give you a couple of quick nuggets here based on conversations I've had with people close to the situation, which is that Tiffany's all-time high is 139. I'm told highly unlikely that they would go to that number. You never know, of course, but they're using the word discipline a lot. And people say, well, yeah, but look what you were willing to pay for Bulgari. Well, but that was a 3 EBITDA company. It was trading. It was very, very cheap at the time, so they were willing to go up a lot more. As well, would they go hostile? Would Bernard? No, unlikely that they would go hostile. And by that, I mean, obviously, a proxy fight. Think Broadcom, Qualcomm, something along those lines. No, you do have an unsolicited bid here. You do have a company that has struggled to a certain extent over the last few years. This is a 32% premium to the unaffected stock price. Let's call that Thursday, before rumors of this started to hit the market. And they're going to have to figure it out, Jim. What do you think when it comes to valuation?
Well, look, this is a company. Boglio came in. He's the CEO. And Boglio inherited an undermanaged company. He had a terrific plan. He has some bad luck. The plan was to expand into Hong Kong. They lost 6 business days in Hong Kong because of what's going on. And really make a major presence in Beijing, in Shanghai, in e-commerce in China, in part because they recognize that this dollar problem is going to make it so no matter what they do in the United States, Macy's, they can't get it together. So there's some real bad luck here. This is not the time to be levered to China. It's not the time to lever to Hong Kong. It is the time to pick them off.
It is the time, right? You say, to try to see, particularly because of the Hong Kong weakness, which is unexpected. But maybe they've got a plan in place that is going to. So, it's unclear. I have not talked to any large holders here. The Qatar Sovereign Fund, I think, is one of the largest holders. Unclear where they would end up in all of this.
Right.
But LVMH is going to have to wait a little while here and see what it is that Tiffany chooses to do as their board sort of starts to review things. There's got to be at least a couple of board meetings between now and then.
We don't talk enough about how fabulous LVMH is.
I had no idea.
This is the biggest.
$215 billion market value. He's either the second or third wealthiest man in the world.
Yes. Not to mention their quarter and their guidance last week was just off the charts.
Extraordinary. And this is Louis Vuitton, Moet Hennessy, but it's so much more. And I think that people, and I was speaking to Mark Benioff about who is really the best. He's got so many retailers in his stable, but he said, why aren't you focusing more on LVMH? And I said, oh, I focus on Sephora, which is unfortunately JCPenney. I focus on their high-end clothes, but this would be a capstone move because remember, Tiffany's moved up. One of the things that this management's done is go heavily toward platinum and gold and down on silver. So it really fits the LVMH mode. I think they get their man here.
Wait, you do?
I do.
You think they're going to prevail?
Yes, I do. They have unlimited firepower.
They do, but to the extent that they keep saying to me discipline and they won't go to the all-time high, which is only $10 above where that stock is trading right now.
Although there was some discussion this morning how it values at 25 times and EL's trading 28. Could you go that far?
It's funny, EL reports this weekend. There's a lot of, again, chatter that EL's going to miss, in part because a new survey put out by Piper that younger people are not putting makeup on. That is very different from what Fabrizio Freda, who's the CEO.
EL has a much higher growth rate.
Yeah, EL's just, EL's pristine. And it really is. When you speak to EL, by the way, what do they like? LVMH. Everybody worships LVMH except for us because we have not spent enough time on it. Well, today's the day. Look, let's put it this way. If anyone's going to get him, it's
wants to join us sometime to talk about how rich he is, and we're happy to have him on.
I tried to go to Tiffany on Friday with my wife, and they were right in there waving at them, and it was closed. It was 1 minute after. They lost a very big sale.
How is it that a French guy's allowed to be one of the richest men in the world?
Well, I'll tell you, I think that is because there's two Frances. There's the rich France, and there's the poor France.
We could get a new record high at for the S&P this morning. In fact, it looks pretty likely. There's Branson on the floor, along with Chamath. We're going to talk to them later on this hour as Virgin Galactic becomes the first human space travel company to go public.
Everyone's asking about this company. Everyone. It's made Beyond Meat look like, Beyond beef jerky.
Yeah, and by the way, this iris outside, that giant flag, is Branson's actual eye, according to our reporter Michael Sheets.
You mean his eye like his eye?
That's coming up. Don't go anywhere.
There's golf. And there's the golf.
I've got to tell you about our beautiful city break in Bath. Midweek is the perfect time to beat the crowds. Just an hour and a half by train from London. It was so relaxing. We headed straight for Bath Christmas Market. Oh, I can still smell the roasted chestnuts and mulled wine from the chalets. We dropped off our Christmas shopping at the hotel. Then it was off to be spellbound at the Theatre Royal Bath. There's so much to do in Bath. I'm already planning my next trip.
Discover the magic of Bath this Christmas. Plan ahead at visitbath.co.uk/Christmas.
There's something for everybody this Halloween at Aldi. Dead good sweets, decorations, face paints. Be afraid. Be very afraid to miss out on these shockingly low prices. In store now. Everybody get to Aldi for an amazing Halloween.
Halloween's back.
I've always loved a kitchen experiment, especially smoothies. I've blended all sorts of mad combinations. Strawberry and charcoal, broccoli and chocolate. Not my best, that. But when I test blenders in the Witch Lab, it's not about flavour, it's about performance. Our tests use proper tough stuff, hard ice, strong veg, rough nuts. And the blenders that can hack it are the only ones we recommend for your kitchen.
Which tests harder so you can buy smarter. Visit which.co.uk.
London, switch to Vodafone, the UK's best mobile network, and V Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Hurry to TradePoint. The 3 for 2 on all paint offer ends this Sunday. Plus, if you have loyalty discount, you'll get this on top. From Dulux Trade to Leyland Trade. Don't miss 3 for 2 on all paint at TradePoint. Every third item per single transaction in descending price order free. See tradepoint.co.uk.
Hello? This is Dustin. I found something. Is anybody there?
We hear you, Dustin. With Sky Q, you can easily catch up on epic Netflix shows like Stranger Things and then watch award-winning Sky originals like Chernobyl. Get Sky and Netflix all in one place on Sky Q for one surprisingly low price, just £25 a month. Visit sky.com and join today. Offer ends November 14th. 18-month minimum terms. Prices may change during contract. Requires Sky Q box connected to broadband. Set up from £20. Further terms apply.
Shaping up to be a big week. It's the busiest week of Q3 earnings. Obviously, the Fed meeting, Boeing's Muhlenberg on a hill, and a likely record high at the open when the opening bell rings in about 6 minutes.
Looking for the best balanced transfer cards?
Deep left center field. A grand slam!
October baseball is here, and TuneIn Premium is your ticket to the 2019 MLB postseason. Featuring the home and away feeds for every game, TuneIn Premium delivers every call of the ALCS, NLCS, and the 2019 World Series through the voices of the local radio broadcast teams.
In the air, left field and deep. He's at the wall!
Now until a new champion is crowned, hear every play of the 2019 MLB postseason live on TuneIn Premium. Upgrade today.
Touchdown, Minnesota! Grabbed by heavily covered. Touchdown into the end zone for the touchdown.
Tonight, TuneIn has your Monday night NFL football with the Miami Dolphins at the Pittsburgh Steelers. Kickoff at 8:15 p.m. Eastern.
Quick throw out to the side. Taysom Hill across the goal line. Touchdown!
But Robbie's got an airborne. Robbie Gold's field goal is good!
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
Far wing elevates, triple bucket.
The war of the crown. The shot clock ticks down. Will the ball go in? The suspense is pure torture, but you wouldn't miss this for the world. And the replays just don't cut
To
it.
the sideline, the man fleet for three.
TuneIn Premium brings you every minute of the NBA season streaming live, so you can be there when it matters most. Hear it now, hear it live on TuneIn.
Pump fake in the lane, turnaround jumper from 8 feet is good on
Search
the right block.
NBA today to start listening.
Upgrade to TuneIn Premium and get over 45 commercial-free music stations. You'll also get live commercial-free news, plus live play-by-play games from NFL, MLB, NBA, and NHL. Visit TuneIn.com/premium to upgrade.
Looking for a new podcast to inspire your work life? On the latest edition of Pod Club, Adam Grant, host of TED Podcast Work Life, shares the pods that have blown his mind.
For Work Life, the top 3 episodes I think everyone should listen to. Gosh, that's like choosing a favorite child. I guess I'd pick How to Love Criticism, Your Hidden Personality, and The Creative Power of Misfits. And if there were a 4th, How to Trust People You Don't Like, and a 5th would be the debate I had with Malcolm Gladwell.
Go to Podcast on TuneIn to see Adam's Pod Club picks.
ESPN Radio and TuneIn just go hand in hand. Hi, this is Mel Kiper Jr. reminding you that all of your favorite ESPN Radio shows and events are right here on TuneIn. Just search ESPN Radio to begin enjoying it today.
You're watching CNBC Squawk on the Street, live from the financial capital of the world. The opening bell in 3 minutes. Busy Monday morning as we wait for Virgin Galactic to open here at the NYSE. Jim mentioned Microsoft a moment ago and this $10 billion Pentagon cloud computing contract that they won over Amazon, and lots of reporting over the weekend about just how this decision came about.
Look, I mean, a lot of people feel that these are 6 for half dozen. I know that Andy Jassy would disagree. He runs the Amazon cloud. The acceleration in the cloud Azure that Microsoft runs is rather extraordinary. I think that there will be people who say, "What did the president put his finger on the scale?" Well, this is a tough one because Satya Nadella has done such a great job. You'd have to wonder why the Pentagon just didn't pick them, because it might be
Maybe, but, Amazon was seen as being in the pole position on
absolutely.
this for a long
And the president
time.
is
There was competition from others, Oracle as well, and we know what the president has said. So,
I know, but
that's what happens when you mess with expectations like that.
I got to hear Secretary Mattis, no longer Secretary, obviously, Defense Department, talk about independence. He did not mention Trump by name, but I have felt that there was a degree of independence with the Pentagon. Obviously, if you want to make your life easy, you pick Microsoft. We've seen the president go to town on anyone who disagrees with him.
Well, Nomura's out this morning, says don't make it a catalyst for the stock. It's a multi-year deal. annual revenues small versus the total. It's rarely worked out that this actually moves shares one way or the other.
I don't know if I agree with that. You're talking about $200 to $300 million free cash flow benefit. I too had come up with that analysis initially and was saying on Twitter this weekend, don't pay up for. I don't like paying up for a company that just reported a great number. I'd rather buy Amazon down 8 because their number wasn't that bad. But this is a very big and lucrative contract, and I think people have to understand that when you look at the gross margins for data center, it's far better than the rest of your business because, you build the data center and they will come, and it does work. So I think it should be up. Should it be up? We're up 3.5. I think you'll probably end up being able to buy it at 2, up 2. But
would it surprise you if Amazon contested this, as some said they might?
A lot of people think that Amazon will contest it. When I look at a guy like Jassy, who's so fabulous, I think they just say, let's get our job done and let's move on. They've won their fair share of business. I think they'll go forward and just plow forward with the regular business. They did have a deceleration to the high 30s, but the law of large numbers was playing a big role in that. If you want to know what if I were them, I wouldn't contest it, if only just because of the new political environment, where they're regarded as being too powerful.
It's a big step for Azure. There's no doubt about that. Let's get the S&P and the opening bell here at the big board. MDC Holdings, home builder operator, celebrating its 35th listing anniversary at the NASDAQ. Cabaletta Bio, focused on therapies to treat autoimmune diseases. Yeah. And there it is at the open. Our all-time high for the S&P 500, bouncing off of that level we last saw July 26th. Jim?
It is incredible because I've got to tell you, if you told me 3 weeks ago, there were people who say, listen, when we get into earnings season, and it was right before the banks, we're going to be sorely disappointed. What's going to happen is the banks are going to lead us down because of the yield curve. The industrials are going to lead us down because of China. We're going to have healthcare go down because of Elizabeth Warren. We're going to have technology go down because it's been moved too high. Every one of those theses has been either rebutted or, frankly, to the point where it's standing on its head. When you go over some of these, Caterpillar being a classic example, I went over Caterpillar line by line. I kept saying, all right, this is a quarter where everything that they wanted was not good, and yet they're talking about being a dividend aristocrat, buying back a lot of stock, being lean. It is incredible. Illinois Toolworks, look at this stock. It's an incredibly important stock in the firmament because it's in every single, got its fingers in every part, every industrial pie, talking about raw costs coming down, talking about maybe Europe not being that bad. And then you start getting retailers that we've had Walgreens first. Walgreens, well, we're used to having them get clocked by Amazon. Well, their numbers were fine. So I am seeing so much good. And I keep reminding myself that there were these big strategists who were saying, sorry, it's not going to happen this year.
What if it's so good the Fed says, we're done?
I was pondering that this weekend. I said, if it's that good, then I don't care. I do know that the autos, though, need it. If you ask me what the weakest part of this economy is, it's Ford.
Well, you just got done saying manufacturing can be ignored. There's a whole journal piece this morning about the economy can survive a manufacturing recession.
We need the dollar lower. The economy can survive that. Dollar lower and the autos are critical for the next leg of the economy because they are just completely shut out. But again, I will say that we don't need it as much as I thought. By the way, Deere, people keep seeing go. Deere's a kind of a conundrum. People are saying, Jim, we're doing so badly versus the Chinese. What happened is a double whammy positive for Deere. The Chinese went and bought the soybeans in Brazil. Brazil's sales for Deere are extraordinary. And then our farmers got a big check, second big check. Sales here are okay. So you start getting, and you rebut the presumption of every bear here. It makes it difficult to just stay negative. Difficult.
Yeah. I mean, we have had 41 central banks cut rates this year.
Right.
For a combined 2,000 basis points.
Jeez.
Right? Wow. And the market's essentially where it was, a little bit higher now than it was 18 months ago.
Well, I know that there are big cap stocks that we look at that haven't done anything. Facebook hasn't done anything. We have Google, by the way, Alphabet tonight. It does seem that the market, Apple and Microsoft, have been extraordinary. All right. But then again, we've got a stock like Boeing trying to find its footing. I interviewed Doug Parker on Friday, American Air. You know what was astonishing? $400 million lost. Who's going to pay that? He says Boeing shareholders should pay that, not his shareholders. Did Gary Kelly not imply the same thing? And yet nobody's worried about the dividend, which is pretty interesting.
Wow, look at that. Almost 30-40. Wow. Meanwhile, we'll keep an eye on Virgin Galactic, set to trade here at the big board. First public space tourism company to do so. Let's get to Bob Pisani on the floor for more on that, Bob.
And private space tourism about to go public. Here we are waiting for it to open, and I understand it's going to open fairly soon, maybe about 9:45. Remember, no new shares are being sold to the public. This is not technically an IPO. It's just a new listing down here. As we mentioned, Richard Branson is right there between by standing by the bell there, alone 51%. Chamath Palihapitiya, Social Capital, he's standing right over there on the right, that'll own 49% here. It's already been trading in the pre-open. It closed Friday at $11.79. This is the old SPAC. It's been trading at around $12.40 in the pre-open, so that's up nice. Remember, it went public about 2 years ago at $10. The SPAC was $10. Jumped up in July when it was announced that Chamath was buying into Virgin Galactic and closed, as I mentioned, $11.79. A lot of interest in space these days, and there are ETFs out there. This is the first publicly traded, clearly space company that's out there, but there's a number of them out there already, so you can look at the ROKT. That's the Kensho Final Frontiers. Just invests in companies that are very active in space programs. It's done pretty well, up about 30%. It includes Teledyne, Raytheon, Northrop, L3 Harris, those kinds of companies. Those names have done very well this year, so that's done well. There's some smaller ETFs that are out there that if you're interested in the space business, Procure Space ETF, UFO, get it? That's the symbol. They invest mostly in satellites. That only went public a few months ago. It's still a little young there, but the satellite business is really absolutely critical to what's going on in the overall business of space. That's how a lot of this business is being transacted. So again, I understand that this should open around 9:45, and I think we're also going to get some fireworks, this being Richard Branson, and you can see the beautiful little rendition of the plane that's going to be going up. Of course, 6 passengers and 2 pilots. It's right standing over there. One of the great traditions is, of course, they have a bell for the new companies here that are on the floor. And technically, as I said, this is a new listing, so they're treating it as if it was an IPO right now. There's Chamath talking with Richard, trying to figure out where the open's going to be. And you see the indications already there, $12.25 to $12.75. And again, because it's not technically new shares going out to the public, they don't have to go out and find the potential buyers for the shares that are already out there in the hands of the shareholders that they've already sold it to. So the process is going to be fairly smooth. It's really just a matter right now of getting enough of a bid and ask in it to get the size proper. So we're going to get probably within the next 4 to 5 minutes, I would say, we're going to probably have a company going public here at the New York Stock Exchange. And again, we'll get some fireworks on top of that on the floor, on the top here, that we're expecting to see. We'll keep a close eye on that. I'll get to you as soon as we get some indication. Carl, back to you.
We'll talk to you in a bit. Bob Pisani. Jim, we did get a ratification of the GM deal. 4 years, ends a 40-day strike. That'll be the template going forward for Ford and Fiat, which you mentioned other auto sectors needing some help.
Keep thinking about that Ford, late Ford bond downgrade. The balance sheet looks really suboptimal at this point. GM, good to get that out of the way. Autos, just probably the weakest part of the economy. And I see no sign that there's any sort of pickup. There is just in all the truckload, all of the carloads that I get from the different railroads I study, it's just an incredibly weak cargo. So we also are waiting for the Mexico-Canada agreement. Need to see that. Look, let's be honest. Before Trump, these companies were all trying to get all their auto business to be made in Mexico. $5 an hour, incredibly cheap peso, no health care, no pollution control, no union. And that stopped. So the upside stopped. And Mary Barr may do whatever she wants, and good luck to her. But the way that these companies were making their money was to move. And that's over under President Trump. It's just over. You can't do it.
Oh, it's likely over no matter who's president next.
Does it matter? Yes, that's a really important point. There's no Democrat who favors the migration of capital. That is over. Both parties have come to believe, and I'm going to use this term, and I know it's going to shock people, globalization's over. The notion of globalization is over, and those who continue to seek it are really living in yesterday's world. So then you say, well, wait a second, Apple's about to report, aren't they the king of globalization? I would say, but Apple's been able to localize everywhere.
Jeffries, they got a bunch of price target increases on Apple today. Jeffrey goes to 285. Which
that's good.
New street high.
That's good because a lot of the price targets are still well below where the stock is, which gives them ample opportunity to be able to raise their price target. I don't know. I don't like it when Apple has run so much. You just may not have the horses to take it higher.
When you say globalization, the era of globalization is over, that's a fairly wide-ranging statement, and it could imply as well, if you're right, that an era of growth is over to a certain extent, and that, for example, lower costs in certain areas as a result of globalization are also over.
Well, you have supply chain doing better internally. That's why that Liberty deal, again, is an important deal, the Prologis. But look, David, what can I say? The dollar has made us not competitive in a lot of places. You're always going to get a Coca-Cola. They were globalized. They've been globalized for 60 years. I'm just saying that the notion of outsourced globalization, where what we do is we accept anything that Chinese sends us, and we will export any jobs that's necessary. That era is over. Now, you could say that maybe, Jim, what I'm really saying is that's nationalism. But I just look at what's going on with China. The companies that are there, with the exception of PayPal, have really not been able to get much of a break. And you're starting to think that maybe, I keep hearing that maybe the president, no, let me tell you what I always hear. I may not like him, but maybe the president is right when it comes to what's happened in China.
Wait, what part of it?
Well, that the Chinese have really taken so much of our intellectual property.
I think there's many people who agree with that.
Right. Well, I think there's some people who are thinking, you know what, maybe it is too hard. Now, on the other side, I was speaking to someone who is an importer, billion dollar importer to us, and just saying, look, we can't move from China. We don't have the ability to move from China. China makes something perfectly. We move it to India, and they have good creativity, but they don't make it perfectly.
Right.
Vietnam does not have the deep enough cargo.
I would argue, though, that if the goal was to create more jobs here in the United States, it's not clear that is actually going to be the net result of our trade war with China.
Well, I have to tell you, if you even take a look at Wendy's, they have to hire 20,000 people. Good luck. 20,000 people for breakfast. Wendy's. There aren't 20,000 people to hire, for heaven's sake.
No. Goldman's done some work on whether labor scarcity is truly dragging down non-farm. They say maybe by 15K. It's really not an issue yet.
I think that it depends state by state.
Yeah, sure.
McDonald's, by the way, has been hideous.
Yes.
On the conference call, directly.
Well, and now we know why. Because Popeye's comps were 10-2.
Well, and they're going to bring back that chicken sandwich. I had to wait in line to get the chicken sandwich. It's darn good. Quick serve. Let's see. They missed the quarter, and the stock's down 2. All right.
Not too bad. QSR.
The McDonald's conference call was a somber conference call because Steve Easterbrook was all like, I'm real excited. And then you get that first question. It's like, Wendy's is opening breakfast, and they're going to come on. It's like, well, hey, the more the merrier. He gave you kind of, what he gave you? He gave you a read answer from Netflix.
By the way, this is all about Horton's right here. Horton's
was disappointing.
And that's almost half of profits.
I have to tell you, I think Goldman's wrong on this labor thing. Now, look, Union Pacific last year was telling me they had to hire people who were formerly incarcerated. That is no longer the case. Union Pacific's kind of...
So your point is, even though our trade war with China is not necessarily going to result in more jobs coming back here, right, it doesn't matter because our employment is so tight.
Look, if you're going to have immigration, I think it would be different, but we've shut down immigration pretty hard.
Shut down immigration very hard. There are questions about it.
And our birth rate is not picked up.
By the way, it does appear as part of its overall plan at AT&T to increase margins by 200 basis points over the next 3 years. You would expect there would be some reductions in it.
Oh, David, I think that's really the undercurrent.
AT&T is up sharply, up almost 4.5%. They've reached, it's peace with Elliott, no doubt about that. It's not a settlement in the way that we typically refer to these kinds of things. Nothing has been agreed upon in writing. There's no standstill or anything like that. but they have the full support of that shareholder, and you can see a lot of other shareholders getting on board here as well. They talk about earnings per share between $4.50 and $4.80 by 2022. They are, as I said, going to improve margins by 200 basis points. This again, and they expect a CAGR of the revenue growth of 1 to 2%. By the way, many people would say that's going to be the tougher thing to achieve than will be the margin improvement themselves. They actually appoint a gentleman to oversee really taking cost out of the business. His name is Bill Morrow. They are committed not to do a lot of large M&A, it would appear at this point. And you can see very positive response as we take a look at Mr. Branson there.
Let's see, you put a 12 multiple on that. That's what you get for Verizon. Get a decent price, but not necessarily 60. Get a decent price.
All right, so it's getting a bump today, and then they got to deliver. Listen, if they can deliver that $6 billion in incremental EBITDA over the next 3 years, 50 to 70%, by the way, of what they're going to return $75 billion to shareholders, $30 billion in share retirements, and $45 billion in dividends over the next 3 years.
That's nice, David. We should go to probably infinity and beyond, don't you think?
As we watch Sir Richard there, we're waiting the first trade on Virgin Galactic. Your ticker is going to be SPCE. First human spaceflight company to trade on the exchange. I haven't gotten your take on whether you're even interested in this area. As an investment.
I've been asked about this one a half dozen times this weekend. It is going to have such a great retail following. Tremendous retail following. He's magic. People want a little bit of magic.
I don't think we've seen sparklers above the posts before. That's a first.
What can I say? He's a showman. I mean, we don't have a lot of showmen. Showmen historically have, John Legend's a showman, but boy, he's quiet. I don't know. People want to own a stock? Good luck.
All right.
It's a lottery ticket.
You see it as is it travel novelty? I mean, what gets us past the novelty stage, right? For very wealthy
I think there are people who think, you know what, we don't know what the future looks like, but he does. And so I'll bank on his future. I had someone trying to talk someone out of it this weekend. And at the end, the person said, hey, thanks, I'm going to buy a lot.
Well, not a horrible open, obviously, up 3.5%. And we'll talk with him in the next hour. Are you going to stick around for that, I think?
Well, I've got, what I like about it is that finally we have these deals that don't seem like they're just way on us. Peloton. Peloton happens to make it great. There is a Peloton that's great, and it's not just a hanger of Lululemon clothes for my wife. It's a great mezcal. It's just not the same company.
It's funny, talking about that made me think of direct listings, which took me to Spotify, which is having a very strong morning, up 10% on what were better than expected numbers.
Oh, line by line, the numbers are better. And in McCaffrey, I thought might hurt it.
He's going to be stepping down as the company's CFO.
But line by line is better.